you're watching Ask Profit on NDTV Profit, and I'm your host Himakshi Bahuguna. Along the next half an hour, I'll be taking up all your stock-related queries. So don't forget to WhatsApp us or call us directly. The numbers are there flashing on your screens right now, viewers. And on the show, I'm being joined by Dinesh Sane, Senior Research Analyst, Invest for Edu on the fundamentals, and Sundar Kewar, T&D Analyst, Ashika Institutional Equity on the technicals. Welcome to the show, gentlemen.
Good evening, Himakshi.
Good evening. Now let's get started with the first query on the show, which is written to us by Venkatesh, and he hails from Gurugram. He holds 50,000 shares of CDSL, and he bought it at 1,390 a piece. And he's sitting on a very significant profit of nearly 80 lakh rupees there. So that's a huge, profit that he's made with this investment of his. So firstly, I'd like to take Dinesh, your view. So what should he be doing at this particular time when he has, made such significant profits? Is there a chance that his profits might get, increased?
All right. So given that, overall, I don't see any issue given that it has a long-term view. In fact, we have seen after the pandemic, these companies have grown so much. But however, on a quarter-on-quarter basis, they have to track how exactly the margins are. Only concern for me is the valuation front. So even if they are booking some profits, that should not be an issue. But for me, I think they should book some profit and keep some rest and keep on tracking how exactly the company is doing on a quarterly basis. Because I think over the long term, some part of the portfolio should be allocated in these kind of companies for growth, because we know that overall the market is for Gen Z is like coming in the market. So I think it will take some time. For now, the overall everything is priced in, but given that 3 to 4 years point of view, some part of the portfolio should be there.
Absolutely, absolutely. Thank you so much for that view. Now let's go across to our first caller on the show. I'm being joined by Amol from Noida. Hi Amol, good evening.
Hi, good evening.
Yes, how can I help you today?
Yeah, actually I'm holding 200 shares of Indus Tower.
Okay.
And my buying price is 347.
Understood.
So I need the short-term view, and I just want to know, can it bridge the gap which is at around 380, 382 level?
Okay. And for how long are you planning to hold it?
Maybe 1 or 2 months.
1 or 2 months. So that's a trading perspective on Indus Towers.
Right.
Okay, so since you've made some significant losses with this investment, so Sundar, Indus Towers is the counter. So are you seeing, any sort of bounce back on the stock and, it crossing the 383 mark?
Yeah, so Himakshi, firstly, if you refer the daily time frame of this stock, the stock has made a high of around 429 level, and then from there itself the stock was beaten down. Now recently what is happening in this counter is that from 3 September the stock has given a kind of buying pressure, but there is one caution over here that the yesterday, that is the 15 September candle, it is a kind of bearish candle which I can see on the chart, and plus the 200-day moving average is acting as a resistance level to watch out. So I think he should book his losses, and rather if he wants to accumulate this counter, then he could accumulate at 330 levels. And talking about the 380 ka gap over here, but I don't think so that in recent time the gap should be filled out because of the price action and the selling pressure at the higher levels.
Right. Thank you so much, Sundar, for that. Now let's go across to another caller who's joining us on the phone line from Mumbai itself. Hi, Udit. Good evening.
Good evening, Himakshi.
Yes.
Good evening to the experts.
Yes.
Himakshi, I missed this interactive show for the last couple of days.
Yeah. Yes,
Okay.
because of some
So
breaking news updates, we couldn't, be here. But today we are there. Please go ahead with the query.
Okay, I have got 100 shares of HMA Agro at 60 rupees.
Yeah.
I just need to know the fundamentals and will I ever get this price? I think it's trading now at 30 rupees or so.
Yes. Okay, so understood your query, Dinesh. Firstly, coming to you on HMA Agro, fundamentally, how are you viewing the counter? Is it a strong bet, and are you optimistic on it from a fundamental point of view?
See, as an analyst, we need some strong margins as well. See, what I can see in terms of numbers, of course, top line is growing from, they have done a phenomenal growth from almost 2000 crores in 21 to 5000 crores. But on the other hand, if I talk about the margins, it has declined from 6% to 2%. In fact, in this recent quarter, their EBITDA margin was not even 1.5%. So from 2% in FY25 to 0.5% in quarter first. This is a bit of a concerning thing. Plus, if I talk about the debt to equity, so it is high. They are relying on short-term borrowings. On a valuation front, of course, it is reflecting. So the margin issue which I just expressed, it is reflecting in the in the overall valuations. So what I will suggest is you can, if you have some losses, maybe you can book to and switch to the other counters, because there are several sectors you can bet on for. Maybe in this period you can actually switch your money to different sectors, so and earn money.
Thank you so much for that. And also, like you talked about switching your position, so do you have any suggestions in mind?
Of course. So we are gung-ho on a consumption theme these days, because if I talk about the numbers, 61% of the GDP is driven from the private final consumption, and GDP is expected from $4 trillion now to at least $7 trillion before FY 2030. So we are betting on auto and auto ancillaries for long term. In fact, we are also looking at some textile stocks. Consumer durables is also should be considered, and NBFC. So these are the four sectors one should look at for at least for it. If they have 4 to 5 years of horizon, they can definitely look in these sectors.
Understood. Thank you so much for that. Now let's go across to Teja, who's joining us on the phone line from Nellore. Hi, Teja. Good evening.
Good evening, ma'am.
Yeah, how can I help you today?
Ma'am, currently I am holding 6,000 shares of Trident at 62.
Yeah.
Currently I am in loss, ma'am. Can I hold them for next 5 years?
Okay, understood. So, Dinesh, we frequently get asked about Trident, and, people have invested in the counter, keeping a long-term perspective in mind, but they are currently incurring a loss, since Teja also is sitting on a loss of, over 1 lakh rupees. So what suggestion do you have there? Fundamentally, how strong is Trident?
See, different things I have in mind about the company. So, see, I prefer different stocks definitely, because what I see is in terms of numbers, it is growing, but not at the pace which you are expecting. So, in different sectors, I think textile and textile stocks, I have some suggestions. Maybe KKCL, Cable Kiran Clothing, is one of the good stocks. They can study for a long term. Also, ABRFL is one of the good companies. They can study for a long term. Of course, Trident, what I would suggest is maybe they can keep a very keen track on a quarter-on-quarter basis what exactly management is saying, because I think keeping a track on what management is saying is must in this counter, and everything based on what management is saying. So I would suggest if they want to hold, they can keep on tracking on quarterly basis. Otherwise, the two stocks which I just mentioned, they can study that as well.
Thank you so much for that view. I think it will definitely benefit our viewer there. And also, Sundar, coming to you on the technical front of it, what are the charts suggesting? And if somebody wants to, book their losses, let's say, so what are the levels that they should be eyeing at?
Yeah, so interestingly, Himakshi, on weekly time frame, there is some kind of activity which is going on. Like if you see technically, so there is a kind of higher rise and higher low pattern, but it is still in a formation phase, I would rather say. And if anybody wants to, book its losses, then he could simply place a stop loss at around 27 level where the recent lows are made. And if anybody wants to add its position, then yes, I would definitely recommend to add at 34.5 level where the recent highs are made. And plus, if you see the stock is, I could see on the price action that the stock is facing some kind of buying pressure from the support level itself. So once the structure is complete at above 34.5, then you could enter along at this counter.
Right. Thank you so much for that. Now let's go across to another caller who's joining us from Bengaluru on the phone line. Hi, Kiran. Good evening.
Very good evening, madam. I
Yes.
purchased MCX at 8,000
Yeah.
quantity.
Okay.
And I need information and future about MCX. What is the stock split? How for 6 months or 1 year span can I hold or it can be exited?
Okay. So Dinesh, firstly, I'd like to come to you. MCX is the counter. So fundamentally, is it a strong bet?
Yeah, so if I talk about the volumes and overall structure in terms of fundamentals, I don't see an issue. Only thing which I see issue is their overall valuation front. So I think one should keep on tracking again, as I mentioned, because on a quarterly basis, even if I talk about the numbers, year on year they have done very well in quarter first, and of course on a yearly basis they are doubling their top line as well. Plus margins are also sustainable. So only one thing which I am not comfortable is their valuations. So even if they think they want to book some profits, they can do that. Rest they can hold for at least for maybe 3 to 4 quarters and keep tracking the company.
Right. Thank you so much for that view. Now we have Guru who is joining us on the phone line from Bengaluru. Hi, Guru. Good evening.
Hi, madam. Good evening.
Yeah. How can I help you today?
I'm holding GRSA stock.
Yeah.
I'm holding around 3,000 quantity at the price of 2,400. The
Understood.
stock is too volatile. Can I hold? Would you like? Technicals looks very bad. How about the fundamentals? Can I hold for? I would like to hold for 3 months. So what
Okay.
is the view?
So you just want to hold for 3 months more. And you have made some profits, is what I can see, over 1 lakh profits. Am I getting your query correct? You need a 3-month outlook on the counter?
Yes, ma'am.
Okay. So Sundar, I'd come to you on Garden Reach Shipbuilders. What are the charts looking like, and will he be able to make more profits, or should he be booking his profits at this point?
Yeah, I think Himakshi, the viewer will be able to make more profit out of it. Now I'll tell you the reason why. Now, if you see the longer perspective of this price action, then from 4th March 2025, the stock was trading somewhere around 1,100 level, and then from there itself, the stock has made a high of around 3,532 levels. Now, the stock has faced some kind of correction, but again, if you look at it, technical structure, this is the behavior of the stock that the stock, sometime forms a lower highs and lower low, which is again a corrective pattern. In the recent action, I could see that there is a kind of consolidation pattern which has been formed, and the stock is trading majorly into a range. And additionally, there is a resistance of 50 DMA. So what I would suggest for the viewer is that firstly he could place a stop loss at 2,320 level to be precise, and if that level is taken out, then I would rather tell him to book his losses. Or if the stock breaks above the 2,600 level, then in that case he could add more, because again there is a high probability that the stock could reach till its new high of 3,500. So I would recommend the viewer to hold with a stop loss of 2,320 levels.
Okay, thank you so much, Sundar, for that. Now we are being joined by Prakash on the phone line from Andhra Pradesh. Hi, Prakash. Good evening. How can I help you today?
Good evening. I am holding the BSC shares at an average price of 800 per share.
Okay.
I want to further add some more shares for, say, like 40 shares for
Okay.
long-term perspective. Is
Okay.
it good to add?
Understood. So, Sundar, I'd like to come to you on this one, because, he's planning to add more of BSE, and currently it's trading at 2,199. So, are these the correct levels for somebody who wants to, accumulate more?
Yeah, I think Himanshu, yes, this is a correct level to add on. Now I'll tell you the reason why it's the correct level. Again, the recent price action at 11 March 2025, the stock has given a tremendous return, and then from there itself, the stock has corrected 50% of its total gains. So this is a pure strong Fibonacci level plus the 200-day moving average is acting as a strong support level, and I can see on the moving average price that the moving average is rising, which I can see, which is again a positive point for this. So at current market price, the stock could be added, and I'm expecting a target till 2,500 in say around 1 or 2 months.
Okay, so 2,500 levels is what Sundar is eyeing. Our experts are eyeing, by the end of this month. So, all right. With that, let's go across to another caller who's joining us from Chennai. Hi, Kumar. Good evening.
Hi, very good evening. This is regarding Ambuja Cement.
Okay.
I'm holding 140 shares at the 520.
Yeah.
I would like to know short-term view. So
okay.
Just, it is consolidating. I don't know whether it will move up or I don't know.
Yes. So, Sundar, again, a technical query on the show. Ambuja Cements is the counter. What are the charts looking like?
Again, Himanshu, if you look at the technical indicator, the 200-day moving average is acting as a strong support level. The first point over here is then this, and the second point is that there is a kind of buying pressure which I can see on the recent action, where the support level was at 560 levels. So I think so that the stock look positive to me, and at short term the stock could be put on the table, and we could expect a target somewhere around 605 level for the first target, and the second target in short term would be at 625 levels. So overall, the stock look positive to me, and you could hold the stock.
Understood. Thank you so much for that. And also, I'd like to come to you, Dinesh, on the fundamentals of it. So, Ambuja Cement is the strong cement counter. And what's your outlook in the, on the cement space in particular? And where do you place Ambuja Cements there?
Of course, so we are tracking cement very keenly. So what I understand is the overall realizations as of now is sustaining across India. So even the Q1 was seems to be very weak, but the overall, if I talk about the growth perspective, we as India, as I mentioned earlier as well, that we'll be moving from $4 trillion to $7 trillion in next 5 years. So infrastructure is a strong segment to bet on, and Ambuja is a market leader in this segment. So definitely, I think one should have some part of it and of a portfolio in this counter as well. So on a valuation front as well, I would not say that it is a stretch valuation. So one can add this stock at this current levels as well.
Okay. Thank you so much for that. And just a quick disclaimer for our viewers, NDTV is a subsidiary of AMG Media Networks, which is an Adani Group company, and the channel you're currently watching. And with that, we have Venkat joining us on the phone line from Chennai. Hi, Venkat. Good evening.
Yeah, hi, madam.
Yeah, how can I help you today on the show?
Yeah, this is regarding Engineering India stock.
Yeah.
I'm holding 350 stocks at the rate of 208. Just wanted to know, is it the right time to accumulate, and I wish to hold it for next 6 months.
Okay. So Sundar, I'd pose this question to you. Engineering India, what are the charts looking like, and are these the correct levels, for somebody who wants to accumulate more?
Yeah, so if you look at a daily time frame, the 50-day moving average is acting as a resistance level, the first point. And second point is that there is a kind of selling pressure which we can see over here. So the 50-day moving average is clearly acting as a resistance level. So, we could see some kind of selling pressure from this counter itself. And talking about what price we could accumulate, then yes, I think so 190 to 195 level is a good level wherein you could accumulate. And then from there itself, the stock could give some kind of momentum, because again, the 200-day moving average is placed at 193 levels. So I think so at current market price, the stock could be avoided, and below at 190 to 195, the stock could be accumulated.
Understood. Thank you so much for that. Now we have Shyam joining us on the phone line from Andhra Pradesh. Hi, Shyam. Good evening.
Good evening, madam. My request is I have a position in VPRPL, madam.
Yeah. Yes.
At 3,500 share at the price of 296 rupees, madam.
Yeah.
This is under huge loss, madam. Now my request is fundamental view, madam.
Okay. So Dinesh, I'd like to come to you on this one. So VPRPL is the counter. So fundamentally, how strong is it, and what's the order book looking like? Valuation-wise, how are you viewing it?
I won't be able to give my view on this because I'm not tracking this particular counter.
No worries. I'd come to you, Sundar. If you could just tell us how it's faring on the charts and what's your outlook on this particular counter.
Yeah, so Himakshi, if you refer at the daily time frame, the stock was largely trading into consolidation from 3rd March to say around 12th August, and then from there itself there is a kind of rectangle pattern which has been recognized very well in the markets, and the stock has broken down. Now, again, there is no sign of recovery which I could see on this counter, and I would like to add over here that this counter could face more selling pressure due to the volumes which has been risen while falling in the price. Like if you see, whenever the prices are falling and the volumes are increasing, this is not a good sign for the stock. So I think so this stock could be avoided. Yeah.
Okay, at this point it could be avoided. That's the word coming in by our experts. But we have Ravi now joining us on the phone line from Hyderabad. Hi Ravi, good evening.
Yeah, very good evening.
Yeah,
I have a query on Hindustan copper.
Okay.
Want to know, is it a good time? I mean, at what price it's a good time to enter?
Understood. So for how long are you planning to invest in it?
Yeah, I can hold for next 1 year.
1 year. Okay, so a long-term outlook on Hindustan Copper. Dinesh, if I look at the valuation, it seems pretty stretched there. But still, currently it's trading at 289. And if I talk about today, so it was, up in trade today over 3%. So what's your sense on the counter? Are you bullish? And is it a good time for somebody who wants to take fresh positions?
Mixed view, because in commodities we usually avoid these such counters, but given that the demand for this particular commodity, you can say, is very strong, and I believe that overall it is expected to increase further, because copper is what is needed in each and every segment, though it's consumer durables, etc., you name it. So I think demand is expected to increase for this particular commodity. Given that, I would say that on a valuation wise, I think it is decent on a median basis. So even if they want to add, but make sure that they are very cautious, given that it is a commodity, it is very volatile. So even they want to add, they can add as a tactical play, I can say, but they have to keep on tracking on a quarterly basis. This is what my suggestion is.
Okay. Thank you so much for that. Now we have another caller, Vishwanathan, who's joining us on the phone line from Chennai. Hi, Vishwanathan. Good evening.
About the Ola Electric, madam.
Okay. And are you a long-term investor or a short-term investor?
For long term.
For long term.
Around 1 or 2 years.
Understood. So, Dinesh, I'd like to come to you. Since Ola Electric is also one counter that, we get frequently asked about, since it's a very, volatile stock, I must say, but fundamentally, how strong is it, and what's your opinion on that? And today, itself, it has achieved 1 million production milestone as well. So that was the news regarding Ola Electric today. But overall, fundamentally, how strong is it?
I think these guys are doing everything they can to grow their business, I think. So what I can say, even the management has mentioned recently that we can expect some good numbers from Q2 onwards. So I think we can at least bet on their what exactly they are saying. So if I would be there at his place, I would keep my stocks on a hold until and unless I'm not sure how the exactly management will do. So I think from Q2 onwards, we should see some good kind of numbers. And this is what we are seeing recently in terms of prices as well. So after the management commentary, stock was also increased, and also they are also doing some great launches. So let's wait for the counter. They should keep and hold as of now.
Understood. Thank you so much for that. Now let's go across to Dinesh, who's joining us on the phone line from Mumbai. Hi, Dinesh. Good evening.
Yeah, good evening, madam.
Yes.
I have purchased Vikram Solar at the rate of 365, 300 quantity.
Okay.
I can, at what level I can more adding this stock?
Okay, so you want to accumulate more.
Yeah.
And are you a long-term investor or a short-term investor?
Up to 1 year, 2 year, it will do.
Understood. Okay. So, Sundar, I'd like to come to you. So, the current levels, are these the correct levels for somebody who wants to accumulate more? And what are the chart patterns, looking like?
Yeah, so Himakshi, I think so. It's a recent listing. The data isn't sufficient much, but I would, rather point out the support level which the viewer can accumulate. So the support level for me will be around 320 level, and this is the first support level. And if Prajit manages to sustain this level, then that case, the viewer could add on, and you could expect a target till somewhere around 370 level in coming few months.
Understood. And quickly, Dinesh, if you could just tell us if you have any sort of coverage on this counter, fundamentally, how strong is it?
See, everything will boil down to how these guys are executing. They have a good order book. Even recently, they have received a good order book of I think 200 megawatts. So everything boils down to how these guys are executing. And people are market is pricing in at 92 times of stock P. I think this is a wait and watch. I think that's okay. They can hold for now and keep on tracking the quarterly numbers.
Okay. Thank you so much for that. And I'm afraid that we are running short of time on this edition of Ask Profit. But thank you so much, Dinesh and Sundar, for always being there and patiently solving all our viewers' query. Thank you so much. And viewers, with that, it's a wrap on this edition of Ask Profit. But please don't go anywhere, as there's a lot of action lined up ahead on the other side of the break. Stay tuned.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
Markets move fast.
And so should your portfolio.
India-US trade talks conclude with both sides covering various aspects of the deal. Now that statement from PIB says it was decided to intensify efforts in order to achieve an early conclusion of a mutually beneficial trade agreement. Apollo Tyres becomes the Indian cricket team's sponsor until 2027. That agreement grants Apollo Tyres the title sponsorship rights for all bilateral and ICC, both men's and women's teams, home and away matches. Market ends higher as the Nifty and the Sensex resume their rally after a one-day blip. All sectoral indices except FMCG have closed in the green today. The broader markets have mirrored the gains on the benchmarks. The Supreme Court pulls up the Maharashtra State Election Commission for failure to adhere to the earlier timeline for local body elections, directing all local bodies to conduct polls by the 31st of January 2026. The Enforcement Directorate summons Yuvraj Singh, Robin Uthappa and Sonu Sood for endorsement of illegal betting apps. All three celebrities will be questioned in the next 1 week. The death toll in the Uttarakhand floods has climbed to 15. Several homes in Tapovan have submerged underwater. Massive flooding in the Kaligad rivulet causing severe destruction in the surrounding area. Good evening. Welcome to Profit 360. I'm Vikram here on NDTV Profit, and we're taking you straight to the top story we're tracking this evening. It's about India and the US having concluded their day-long talks on that trade deal. Now, according to a statement that is coming through from the government, from the Press Information Bureau, both the countries have agreed to push harder for an early conclusion of the first tranche of the trade deal. Now, talks in New Delhi between the trade teams from both sides have been described as positive and forward-looking. But let's get the details, the latest updates coming through, that crucial meeting having taken place. My colleague Rishabh has been tracking all of this in Delhi, and that's where he's joining us from. Rishabh, if you can put in a nutshell exactly as far as this day-long meet is concerned, what has been achieved? What do we know so far?
Right, this very crucial sort of bridge round that India and the US took part in today has concluded as expected. The discussion is on a positive, in a positive environment, as well as very forward-looking. So we can now, what we can expect is the formal announcement of the 6th round of in-person negotiations, the dates for those and the location for those. Those are two very key trackables currently. Apart from that, this statement also says that it was decided to intensify efforts to achieve early conclusion of a mutually beneficial trade agreement. So very clear indication in the direction in which this trade deal is headed is that both the countries remain committed to the fall deadline. So by October or November is when we can expect the first tranche of this bilateral trade agreement, and perhaps even perhaps even earlier than the fall deadline, given the fact that both sides seem very, very keen on the early conclusion of this. Again, what was also expected was some sort of commentary on tariffs, but that has not come in yet. So we don't know what the status of the tariff discussions is, especially on the additional 25% that was levied on India with regards to Russian oil purchases. So those were the key updates from this very crucial one-day long talks between India and the US.
So, Rishabh, if I can quickly ask you, but of course, 25% extra levy because of the Russian oil imports by India, that still remains in the balance. But in terms of the next steps now, after this resumption of talks that has happened, what can we expect next?
So what we can expect now is in the coming few weeks, you'll have physical in-person negotiations gaining more traction. Given the fact that Sergio Gore, the US ambassador designate to India, he's also said that the nitty-gritties of a deal are being worked out and most major technical conclusions have been arrived upon. So we can actually expect the expeditious conclusion of this trade deal within a few weeks, of course, preceded by several in-person rounds of negotiations between both the sides.
Rishabh Bhatnagar reporting from Delhi. Many thanks for joining us on this edition of Profit 360. Meanwhile, of course, while we're talking about the 25% extra levy because of Russian oil imports, Ajay Sahai, the CEO and Director General of the Federation of Indian Export Organizations, has told us here on NDTV Profit that the industry on its part is hoping that these talks will facilitate the sixth round of negotiations by the end of the month. And also, they're expecting the Trump administration to consider removal of the 25% secondary tariffs levy on India. This is what he told us.
I'm pretty sure this discussion will lead to the sixth round of negotiation, which could not take place last month, but I'm pretty sure in this month, this negotiation will move forward. To our knowledge, most of the issues have been decided. India has made its red lines also extremely clear, and therefore we are looking towards now finalization of the BTA. As you said, maybe in the first tranche we can look into the trade in goods, and maybe second tranche we can look into services and other issues also, and that tranche may be finalized before the fall of 2025 as committed between the two leadership. I'm expecting that as a goodwill gesture to start the negotiation, he should look into withdrawing the secondary tariff of 25%. This has no basis. India has not violated the sanction. The sanction was on importing oil from Russia above $60 a barrel. India has been singled out also.
That's the word we got from Ajay Sahai when we were speaking to him earlier about the expectations of the industry. Let's tell you what happened in the markets today. The benchmarks have resumed their rally after that one-day blip that we saw. All the sectoral indices have gained in trade, except the FMCG pack. Auto emerged as the top sectoral gainer. My colleague Mahima is here, and she's going to walk us through today's market action. So the end of the day, what exactly did we see, Mahima, by way of the business conducted by the markets?
Well, markets closed well above, the 25,250 levels for the Nifty 50 at its day's high point. Kotak Mahindra and L&T leading that pack. All sectoral indices in the green except for Nifty FMCG, which saw profit booking. Nifty Auto emerged as the top gaining sector, gains led by Balakrishna and MRF. Nifty FMCG as a top sectoral loser, which was dragged by Godrej Consumer and Varun Beverages. The small cap 250 also ends in green with gains of about 0.8%, largely led by Reddington, Godfrey Phillips. The mid cap 150 also closing at its day's high point, led by Sundaram Fasteners, GMR Airports. Nifty Auto, Realty and IT gains over 1% in trade today. Nifty Realty gains for fourth day in a row. The Nifty Oil and Gas gain for fifth day in a row. The Nifty Metals eighth day in a row. The Nifty Bank and Financial Services also 10th day in a row. The rally continues for all of these sectors. The Nifty FMCG, however, fell for third day in a row. Nifty Media has snapped its 2 days losing streak, and overall, Reddington being the top performer in the BSE 500. So this is the overall view as to how the markets have fared today.
All right, Mahima, thanks very much. That gives us a fair indication of how the markets have done, and tomorrow is going to be another day. But tomorrow is also the Prime Minister's birthday. Narendra Modi celebrating his 75th birthday tomorrow. And on the eve of that birthday, we've been taking a look at how the primary markets have performed over the last decade under the Modi leadership. My colleague Somit is here, and he's got a detailed analysis for us. So Somit, when you look back at the last 10 years, now that the Prime Minister is hitting the age of 75, tell us exactly what we've seen in the primary markets.
Well, yes, IPOs have actually boomed in this period, that is from September 2014 till now. If you look at the number of companies that have come out with IPOs, a total of 445 companies have listed around this period. 2014 was a lull period, just 3 companies since September, but 2015, 21, 2016, 26 companies, 2017 we have seen 36 companies getting listed, and these companies have raised anywhere between 13,600 to 67,100 crore. But wait, much better picture is going to come here, because in 2021, if you see, nearly 63 companies have raised money from the primary market, raising close to 1.2 lakh crore rupees. And in 2024, if you see, this was one of the best year for IPOs. 91 companies have raised funds, a total of close to 1.6 lakh crore. And in 2025, so far, around 53 companies have raised close to 74,500 crore rupees. So a good month, around 445, a good number of years that we have seen for the IPO market. Close to 445 companies is what have totally raised funds so far, and the amount raised is close to 6.4 lakh crore rupees. 2024 was the best year. As I mentioned, 91 companies raised close to 1.6 lakh crore rupees. And if you look at some of the big IPOs that have come in, most of them are PSU companies. Firstly, LIC 20,100 crore, Hyundai, which is not a PSU company, but that was the company that raised the most amount of funds, around 28,000 crore rupees. Paytm 18,300, HDB Financial 12,500 crore rupees, Swiggy around 11,300, General Insurance Corp, again a PSU company, which managed to raise close to 11,300, SBI Cards managed to raise close to 10,300 crore rupees, and NTPC raised close to 10,000 crore rupees. So companies that have raised more than 10,000 crore, most of them are PSU companies that have managed to raise this funds in his tenure.
All right, so Amit, thanks very much. That is also very indicative of how the markets have fared over the last decade or so, tomorrow being the Prime Minister's birthday. And we'll continue to track some of those Modi stocks as well that we've been telling you about. But meanwhile, let's turn our attention to the world of cricket. Now, as far as Team India is concerned, their jersey is now going to have a new name. Apollo Tyres, it is the name. And of course, now the company has signed on as this official jersey sponsor for the Indian cricket team. The company has stepped in just days after the exit of Dream 11. This deal is reported to be worth more than 4.5 crore rupees per match, and it's going to run until the year 2027. This change comes after BCCI has barred real money gaming companies from sponsorship deals, which prompted the early withdrawal of Dream 11. So with this, Apollo Tyres is joining the list of big corporates backing the Indian cricket team, taking over one of the most visible spots in world sport. To decode it, brand guru Harish Bijur is joining us from Bengaluru to put this news in perspective. Always good to have you on the show, Harish. Do tell us, because now that Apollo Tyres is becoming the 7th company to sponsor Team India's jersey, the question is, can it avoid the fate of so many others that have preceded it, including a Sahara, an Oppo, a Byju's, and more recently Dream 11. They've all exited under a cloud, haven't they, Harish?
Yeah, absolutely. A cat has 9 lives. We're talking about the 7th one happening at this point of time with this sponsorship. Every one of them has been a bit of a jinx. This is what I call a jersey jinx as far as, the cricket jersey is concerned. Big money going into it, big eyeballs being garnered. So Apollo, bless Apollo for having done this. It's a very bold move. The fortunate thing is Apollo is not a new age company. It is an old company which has been around for a period of time. And I'm sure things are going to go fine for brand Apollo. And, the 6 other mistakes, not going to repeat it.
But it's big money, Harish. 600 crore rupees that bet until 2027. I'm just wondering what you estimate Apollo is hoping to achieve through it on the brand front, because you're going to be slam dunk in the center on the world's most visible cricket jersey.
Absolutely. The money is to be actually divided by something like 864 million eyeballs. And that's a lot, okay? Because, cricket, particularly, the jersey attracts the biggest attention. It's forever there. It's in your face. And it's not only about being in the face, but there's the chemistry behind the jersey, in the sense that, every cricketing moment brings in some kind of good chemistry. And that chemistry creates further chemistry among viewers. So I think Apollo is banking on that. Okay. And so did Sahara, so did Oppo, and so did everybody else, including Dream 11.
But talking about Dream 11, Harish, BCCI now having tightened those norms which bars gaming sponsors. I'm just wondering if you think this brings in more stability, more credibility for brands like Apollo, or do you think that it reduces the competitive bidding, even raises costs perhaps?
Well, I think BCCI did it after the horse bolted. And the horse bolted on several counts. Okay, and I'm being rude as far as this point is concerned. Well, one has learned, hopefully, and Apollo is in. Apollo is that much more stable an entity. It's not a new wave company. It's not an e-commerce company. It's something different. It's that much more stabilized. It's not a startup. It's not an edutech enterprise which could go bust due to malgovernance. Hopefully, things have been cracked now with this seventh sponsor.
But if you look at the larger picture, Harish, do you think the steep cost of Indian cricket sponsorship justify the kind of returns in today's rather fragmented media landscape, if I may call it that?
Yeah, that's the key word, Vikram, because, fragmented. In an era when, TRPs have gotten fragmented and sub-fragmented, the one thing that seems to remain constant is the cricket jersey. Because, cricket is India's madness. Cricket is India's religion. Cricket and what I used to call Bollywood in the old days, now we call it Hindi cinema, were the two religions in this country. So if you hitch your wagon to a star, you go places. And this cricket jersey still remains the single unfragmented media in this country. The single unfragmented media that is worn by some of the best names in Indian cricket. Why Indian cricket? It's not only Indian cricket, it's Indian diaspora cricket, it's world cricket, etc., etc. So I think an unfragmented cricket jersey is what Apollo is betting on.
And Apollo as a brand, its positioning is about performance, reliability and safety. I'm wondering if you think that aligns better with cricket compared to gaming or edtech brands that came before Apollo Towers did.
Well, Vikram, you and I know that, cricket can be reckless as well.
True.
A cricketer can be reckless. Entire series can be reckless. The IPL, for instance, has had a controversy literally every year till the jinx broke about 2 years ago. And now people are saying IPL is very dull. Gone is the excitement that used to be there. But, this cricket is about entertainment. And I think this entertainment is India's entertainment. And India's single, unfragmented piece of entertainment. So I think Apollo has done well in latching on to this star.
Well, we'll see how well it does with the kind of money that is going out there for this kind of sponsorship that runs all the way into 2027. We will be assessing it all through. And of course, you're like we mentioned, you're right at the center of all that attention in a sport like cricket. And for Indians, like you said, it's religion. We will keep tracking that. But Harish Bijur, always a pleasure getting your perspective in. Thanks very much for joining us.
Same thing. See you. Bye.
Now, the government has issued clarifications. These clarifications are on GST, the Goods and Services Tax treatment, after that 56th GST Council meeting took place. So medicines in stock before September the 22nd will not require recall or relabeling even. Compliance on prices is going to be monitored at the retailer level. And all categories of drones are going to attract a uniform GST rate of 5%. The government is also clarifying that bricks are going to be taxed at 6% without input tax credit and 12% with input tax credit. So sand lime bricks, now those are going to be taxed at 5%. Also, when it comes to individual life and health insurance, those will still remain exempt. In fact, now we're going to see hotel rooms with tariffs up to 7,500 rupees per day attracting 5% GST without the input tax credit. Similarly, beauty and wellness services are going to attract 5% without input tax credit. Now, the option of charging 18% is just not available. So local deliveries are now going to carry out through e-commerce platforms. They're going to attract GST at 18%. If the supplier is unregistered, that liability is going to shift to the platform. That's the latest that we know. But meanwhile, while we talk about GST rationalization, which is set to give businesses a major consumption boost, this is something that we are hearing from Dinkar Aila Varapu, who is the head of Flipkart Wholesale. He was speaking to NDTV Profit's Agnidev Bhattacharya. And he said, and he noted, that the industry is still adjusting to an inventory mix, which carries both old and new GST rates. Listen to what he told us.
In the long run, what is good for the consumer, and we do expect an uptake, a tailwind because of that at the consumption end, will flow through the channels, will flow through businesses and will flow through to people like us. To that extent, I think in the long run, it is actually an unmitigated positive. It's a good thing. We expect consumption to grow because of this. I think in the short run, what's happening is the entire trade is actually figuring out inventory, because everybody's got stock which is old GST, they will have stock which is new GST. To figure this out, to balance this out, there's a little bit of, how do I put it, adjustment going right now. But I suspect come the 22nd, I would be surprised if we don't see a pretty good uptick, and it'll start on the 22nd if I'm not, and I'd be wrong. I'd be surprised if it doesn't start on the 22nd itself.
So that's where the expectations are pegged with the rollout of the new GST rates on the 22nd of September. Let's talk about the income tax returns filing. If you've missed that deadline, well, all may not be lost just yet. Now, the centre has announced that the deadline for filing income tax returns is being extended by a day. So it's getting extended to the 16th of September, which is again now a couple of hours from now. So the move comes after people have complained of glitches in the Income Tax Department's portal. Over 7.3 crore income tax returns have been filed until Monday, the 15th of September, which surpasses the record of last year, which was 7.28 crores. My colleague Gargi has been tracking all the developments on the income tax returns, and she's joining us on the show as well. Gargi, if you can tell us about this extension now, a little bit of reprieve being given to income tax return filers. Tell us exactly where it stands.
Missed filing your ITR and worrying about the penalties? Well, you can finally catch a breath. Yes, the deadline to file income tax returns for FY25 has been extended, but just by 1 day. The Central Board of Direct Taxes, or the CBDT, has clarified that taxpayers now have until September 16, 2025 to file their ITRs. So if you haven't filed yet, here's a quick refresher on how to go about it. First, log in using your PAN as the user ID and your password and head over to the ITR filing section. Then select the right assessment here, choose your filing status and pick the correct ITR form. Now, review and confirm all your information carefully. Pay any pending tax dues, hit submit, and don't forget to e-verify your return. Now, just a couple of reminders. Don't forget to declare all sources of income, claim eligible deductions, and file on time. Miss the September 16 deadline and you could face late fees of up to 5,000 rupees. For incomes below 5 lakh, the penalty is capped at 1,000 rupees. Plus, filing late means losing benefits like carrying forward certain losses. Oh, and those WhatsApp forwards about another extension, they're not true. September 16th is the final call. So if you've been procrastinating, this is literally your last chance to avoid penalties and keep things hassle-free. Don't wait till midnight, get it done as soon as you can.
Last chance indeed, Gargi, and yes, doing it before the deadline of 12 midnight is a very good idea. Now, the Supreme Court has come down rather strongly in the Maharashtra State Election Commission for delaying the civic body elections in the state of Maharashtra. And the Supreme Court has noted that the Commission had failed to follow its earlier schedule and has said that such delays cannot be allowed to continue. My colleague Arushi is joining us. She's got the details and is explaining why those elections have been delayed for nearly a decade. Here's the report.
Since the last BMC election in February 2017, Mumbai's civic administration has been functioning on an expired mandate. This has raised serious concerns over governance, urban planning and public health decisions in the interim. Now, this is significant because the court's intervention is expected to restore democratic accountability. This will finally give Mumbai's citizens the chance to choose their representatives after nearly a decade of stalled polls. In a sense, this decision marks a crucial step towards renewing governance, ensuring fair representation and reviving political engagement across Mumbai and Maharashtra. Currently, the BMC is run by an appointed administrator with the Municipal Commissioner IAS holding executive authority over the civic body instead of an elected council. Now, several factors here have contributed to the absence of elections in recent years. The delays were caused by prolonged political maneuvering over ward restructuring. They were also delayed because of legal disputes regarding reservation policies and even administrative changes at the state level. The COVID-19 pandemic also complicated timely scheduling of polls. Supreme Court's directive is a turning point. It ends a long stretch of bureaucratic control and restores Mumbai residents' right to elect their civic leaders.
Arushi, thanks very much for that. Now, the Supreme Court putting down strictures as far as the State Election Commission is concerned, and we'll keep tracking that for you. What we're also tracking is how the state, Maharashtra's Transport Authority, has granted those provisional licenses to Ola, Uber and Rapido to now legally start running bike taxis in the city of Mumbai. So what has been an unregulated service so far, it has been working in a grey area, now has a legal license, and they've got fixed fares as well. So my colleague Charu Singh, she actually went out on the ground. She journeyed on a bike taxi from BKC to Andheri to find out what exactly it means, especially for the riders and the entire ecosystem, as it were, when it comes to bike taxis. Here's what she came away with.
I am an employee who works in BKC, and currently to look into this issue and see how well the service is actually performing and how much help it is actually giving to the customers, I am going to Andheri from my office, and with me I have a cab taxi driver with me, Mr. Abhishek. तो अभिषेक जी, बहुत बहुत स्वागत है आपका NDTV Profit में. हमसे बात करने के लिए शुक्रिया. जैसे आपके पास दिन में 10 लोग आ गए, उसमें से कितने यूजुअली मेल कस्टमर्स होते हैं, कितने फीमेल कस्टमर्स?
मेल फीमेल दोनों सेम ही आते हैं.
लगभग सेम ही रहते हैं मैम. तो ऐसा कोई एप्रीहेंशन नहीं है कि फीमेल लोग कम बाइक बुक करते हैं?
नहीं मैम, दोनों सेम है. मेल फीमेल दोनों सेम ही आते हैं. कभी कभी ऐसा होता है कि 5 से राइड सिर्फ गर्ल्स का ही मिल जाता है.
और किस किस एरिया में सबसे ज़्यादा राइड्स आती हैं, मतलब कौन लोग सबसे ज़्यादा बुक करते हैं?
मैम सबसे ज़्यादा BKC हो गया, बांद्रा वेस्ट हो गया, फिर सांता क्रूज ईस्ट हो गया. सांता क्रूज, बांद्रा, बिलेपाले, अंधेरी में ज़्यादा राइड आता है मैम.
आप मुझे बताइए कि क्या कहते हैं, ये ऑफिस गोअर्स ज़्यादा आते हैं?
जी मैम, सुबह 7 से लेके 11 बजे तक काफ़ी ऑर्डर रहता है.
तो मेजरली आपका जो काम होता है वो दिन का रहता है, क्योंकि ऑफिस वाले लोगों का आना जाना लगा रहता है.
और फिर शाम के टाइम हो गया 7 बजे 6 बजे आसपास.
अगर मान लीजिए मुझे BKC से अंधेरी जाने में 1.5 घंटा लगता है, ठीक है, तो मुझे बाइक पे कितना टाइम लगेगा? अगर गाड़ी
35 मिनट मैम,
35 मिनट से पहुंचा देते हैं?
जी मैम जी.
और क्या कहते हैं, पेमेंट कितना कम रहता होगा एक कैब से? लगभग आधे के आसपास.
आधे के आसपास रहता है मैम, आधे के आसपास.
तो जैसा कि आप लोगों ने सुना, these bike services are helping office goers mostly, and they are hailed mostly in areas like Chembur, Bandra complex, Kurla, and also that amount of time taken to reach from your house to office reduces by almost half, and so does the price. So I see this as a win-win situation for almost all office goers.
Well, our reporter Charu Singh definitely quite happy with the service, but is it true for the larger ecosystem? Now, that's something that we've discussed at length on The Big Question here on NDTV Profit, and that discussion is going to come up at 9 o'clock tonight right over here. And we've got several facets of this entire debate, whether it's going to be chaotic for a city like Mumbai or is it going to ease commute for Mumbaikars. Do watch that, but for the moment, from this edition of Profit 360, I'm Vikram Solar. Thank you, Neat, for joining us. Have a great evening ahead, and do keep it with us on NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो NDTV सबसे पहले जिक्र में आता है.
मैं आपका बात से सहमत हूं. उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Shantanu Sen-Gupta, Chief India Economist at Goldman Sachs, who joins in on the show now. Shantanu, good morning, and always great to have you on the show. You have an interesting take on what I think a lot of commentators have been celebrating with the GST rationalization, the income tax relief which was given in Feb as well. You're looking at it from the lens of fiscal slippages. How worried are you? I think you're on mute, Shantanu.
Thank you. We think that the worries on the fiscal front are overdone. Our sense is that you'll be losing some revenues on the income taxes cut around 20 to 30 basis points of GDP. There'll be a further 10 basis points odd slippage from the GST rate rationalization. But our sense is actually the government will stick to the fiscal consolidation path, which means that some other expenditure, including capital expenditure, will have to bear the brunt or take that hit. And therefore, from a top-down perspective, we think that this cycle is very positive for consumption, whereas CapEx, especially from the government side, will be taking a slight hit. And therefore, we are waiting for the private CapEx cycle to kick back in once the tariff-related headwinds are over. So on aggregate, I would say slight bit of fiscal concern. From the market side, we think it is overdone. We think that the government is going to stick to 4.4% of GDP, and we favor consumption, especially the mass consumption category.
Santu, just to understand this, sorry, because I heard you say that fiscal concerns, did I hear you say that the fiscal concerns are, I mean, for lack of a better word, overblown or exaggerated or something like that? Did I hear you say that? Because I was reading your note wherein, I mean, it is of course 5th September, but it mentioned that fiscal risks have risen. So I was just trying to understand if things have changed between then and now.
So from the market's perspective, the fiscal risks have risen.
Okay.
And therefore, you've seen the back-end steepening of the curve. So anywhere between the 10-year to the 30-year point of the curve has now risen in terms of yields. Okay. We think that is overdone. We think that the government there's no concern in terms of the government sticking to the consolidation path. We think that the government is going to stick to the 4.4% of GDP fiscal consolidation target. And therefore, what that is going to mean is some expenditure reallocation or cuts elsewhere. Most likely, some bit of it will have to be borne by capital expenditure and some expenditure cuts elsewhere to stick to the consolidation target. But the fiscal risk in terms of higher issuances, we think is overdone.
Got it. Okay. We also want to invoke the JP Morgan bond cutting piece in the conversation, but just a follow-up to your answer, Shantanu. Now, I'm requesting you to, as you would normally do, right? Take maybe an 18-month or a 30-month view, right? Because the government is anchored on fisc numbers, the fiscal consolidation, and we know that that's probably a certainty. So this year, until the spends come back, maybe the cuts happen on the capex side. But if you take an 18-month view, could the government be able to balance out the troika of fisc consolidation, revenues, as well as spend on consumption and capex? Could all three coexist well if you take an 18-month view?
We think on the consumption front, all of this is very good. I mean, first the income tax cut, now the GST cut. You've already seen some transfers happening at the state government levels, targeting women in lower income households. Plus, you have a very organic growth cycle in the agriculture front, right? I mean, you have great production this year, food inflation is lower, and real wages are higher. As you head into next year, we think that private capex will have to come in a bigger way compared to the government. The government will still be spending on capex, most likely in line with GDP growth rate, nominal GDP growth rate, or slightly lower, because you're sort of holding the capex spend as a percentage of GDP, or maybe shaving 10 or 20 basis points. But the main heavy lifting in terms of capital expenditure going forward, if I'm looking at the next 18 to 24 months, will have to be done more by the private sector, in our view.
I'm just wondering, Shantanu, do you see it play out positively for the consumer staples, consumer discretionary space in a very real way? Because the cause and effect are not really matching up. when you see what's happening to some of the larger companies. Do you think that there is a bit of a chain that is broken there, or how do you see it pan out, where you have a boost in consumption, but where does that extra money go?
So we think that until now you are having a boost both through the agricultural cycle and through the GST rate cuts, especially at the very bottom end of the mass consumer goods. This was a boost for staples. But now we've also learned on the GST side that some discretionary items rates are coming off, and therefore we are positive on the layer above the very mass consumer space as well. I mean, namely autos, for instance. So overall, we think that this is pretty positive for consumption. If you put everything together from the start of the year, income tax cuts, part of it could have been used for deleveraging, but the rest of it is getting spent and coming back into consumption. Then the agricultural cycle, which is very organic and had nothing to do with sort of fiscal or monetary support in any way. Now you have the GST rate cuts. You've got 100 basis points of easing already from the RBI. We think there's one more to go. You're having the CRR cuts come through. All of this coming together, we think is going to be positive for consumption. Actually, on the staples front, you've seen volume growth slightly recover already in the previous quarter. In this quarter, it's going to be a bit of a challenge because the GST cuts have been announced and there might be a delay in purchases. But in the next quarter, that is in the October to December quarter, we would expect this recovery to really pan out.
Shantanu, in fact, we were just discussing with regards to where JP Morgan goes now. What they've done is they've reduced their weightage with regards to India and China in terms of their bond index. Firstly, what is the kind of impact are you seeing from an overall perspective on the bond market, specifically when you have to look at India?
Yeah, so on the bond markets, I would say, as I said earlier, the curve is quite steep. The 10 to 30-year point, especially at the very long end of the curve, is quite steep. Our sense is that if the government is going to stick to the consolidation path and you're not going to have incremental issuances, the flow of savings in that segment is quite significant. And therefore, from a macro standpoint, we like the back end of the curve. Another way to put it is that we think that yields are going to come down in the very long end of the curve. You've seen a bunch up in issuances also, both from the state and the central government side in the first half of the fiscal year. And therefore, we think that is going to come off again in the second half. All of that put together, we think that yields are headed lower if we look at this like 3 to 6 months out, especially in the long end. The JP Morgan move is going to be a fraction in terms of the overall flow that you've seen. You've seen a significant amount of inflows in the previous couple of years when the bond index inclusion happened. You're going to see somewhere in the region of $2 to $3 billion of outflows just because of this reallocation. But again, as this happens, remember, from an active management point of view, some of the valuations in the long end of the curve is quite attractive, and therefore we would expect some flows to come back in the very long end.
So that's the kind of impact that you're seeing, but it is very steep right now. What happens from here on is going to be interesting because you have the GST rate cuts that are coming in, the impact with regards to the government's revenue collection and in turn the fiscal deficit. But thank you so much, Shantanu, for joining us on the show and sharing your views.
Let's get in the market conversation going. Aditya Suresh, Managing Director, Head of Equity Research at India at Macquarie Capital, joins us right now on the show. Aditya, great having you as always. Thanks for taking the time out. Aditya, I don't know if my memory fails me, but if I remember the last time that we spoke, you were cautious, let's put it that way. And correct me if I'm wrong. I wonder if that mood has changed for you, considering the 2 or 3 things that have happened, namely the GST changes that have been ushered in, plus the apparent thawing of the relationship between India and the US as well, and of course India and China too, right? So is that cautious mood changing?
Neeraj and Tamal, thank you for having me on the show. Your memory serves you correct, Neeraj. So we have had a more cautious, guarded stance here on broader markets. But just to take you back a little bit to why that was the case, right? So the core point that story is about earnings and what's already in earnings expectations, and the requirement for a reset lower from a consensus perspective. That is one. Point two is about kind of foreign flows, that being absent as a support factor. But what we did see is domestic liquidity, which is still kind of supportive, and so rather than being outright kind of underweight here in the market, the real strong domestic liquidity is what kind of still kept us optimistic, selectively looking for bottom-up ideas. To be quite candid, Neeraj, if I use the same framework, where we are today is in a similar boat, right? So when I think about earnings itself, yes, consensus has moderated earnings estimates, but are we in a phase where we think that earnings is going to be surprising on the upside despite these recent measures? We're not. And that can kind of go through by sector, by stocks, and so forth. Foreigners, again, I think there are alternative choices there, right? Say markets like Korea, Taiwan, these type of places had a stronger run back to fundamentals. So I think foreigners in itself are still not really a support factor despite this relative underperformance we've seen year to date. Domestic liquidity is still a support factor. So when I kind of put those pieces together, so I think the key thing which I'll still anchor my discussion on is around what's happening in earnings, and even at a headline level, like what we commonly speak about is, let's say that earnings for the market has to grow at nominal GDP plus X, right? But when you look at some of the real-time trends, or even if you look at the past 4 quarters, revenue growth for, let's say, MSCI India, which is a broader universe, is at maybe 5-6%. So we're looking at GDP minus rather than GDP plus, even at a revenue kind of baseline. Underneath that, we've seen margin erosion, right? And so net profit growth has further trailed that kind of that level. So we have had some one-off gains kind of supporting the recent optics, but the underlying kind of message here is that we're looking at a market where earnings growth for the past 4 quarters on a year-on-year basis tracking at, say, sub 5%. The expectation is that we kind of see a recovery back towards that low teens kind of trajectory. In that context, I think the GST kind of measures helps that, but are we in a phase where expectations are going to be really revised upward? We don't see that, so it's still quite guarded, if I may. It's very selective, very bottom-up. That's at least the nature of quite a few of our conversations.
Relative terms, Aditya, I think you're still sounding a little more positive than the last time we spoke, right? Good morning, Tamanna here, and that's a nice tie, by the way. Just want to understand whether you're seeing any positives, and I think you speak about it briefly, for the financial space. If you're going to look at further expenditure, more discretionary spending power for a consumer-driven economy, is financials the way to go, and then which direction are you headed in?
So within financials, again, so our analyst team, we're still fairly cautious. So we're not en masse going out and saying buy all NBFCs, and a lot of that is done kind of what's already in growth expectations. So at least it is our view that growth expectations in itself, if you're like expecting, say, 20% kind of growth plus some margin expansion, we don't see that level of growth necessarily kind of coming through. We are kind of closely watching kind of stress in that space. So it's a bit more kind of nuanced within the NBFC space. Within the broader kind of financials, we're still kind of more risk averse, if I may. So our positioning is more towards like an ICICI Bank or a Bharti or HDFC Bank. With ICICI Bank again, so there the dynamic is that at least our analyst is expecting that we get back towards that, let's say a low teens kind of credit growth, some margin expansion kind of levers. But even there, with the banks, a bit of a nuanced comment, which is that like this year we're actually seeing cuts to numbers. We're not really seeing that high pace of growth. It's more about a recovery into FY27, FY28. So selective on the financials, more large cap, the common kind of banks kind of where we'd be positioned.
Okay, Aditya, but in the same vein, so if there are cuts this year, but the future looks good and which is great, then you may be partly constructive there or mixed there. What about NBFC side of the business? Because that's where there is belief that both disbursements as well as margins will look good for the next 6 months at the very least, if not longer. Is it prudent to be constructive there? And if so, which buckets? Because there are some which are proven and expensive and some which are kind of at the bottom of the valuation cycle.
Yeah, look, so I think it's a very selective, specific comment, Neeraj, quite candidly. But yeah, if you had to kind of frame it in the next, say, 3 months, 6 months, are we seeing tactical kind of buy ideas within our kind of list of stocks? We are, right? So, for example, our analyst team likes Shriram in that kind of NBFC space. We like AB Capital in that space. It's very selective. It's not an en masse buy NBFCs kind of comment. But as a broader theme for NBFCs, I think the disbursement growth, which at least we are expecting, or our analysts are expecting this cycle, is not in the 20s, you know. Maybe mid to kind of high teens is kind of more realistic as a pace of growth, which we're thinking about. And a lot of that has to be kind of toggled with risk as well, right? So it's in terms of like how much of risk you're willing to take to kind of to cater that growth. And at the margin, the segments which these guys are catering to is seeing a bit more stress. So I think there's a bit of kind of a response that we slow down, toggle back growth in response to that kind of emerging risk.
Among, and I'm looking at your report, Aditya, one thing that caught my eye is in your negative surprise list, you have an Eternal, DMart, TechM. But talk to me about Eternal. What are you thinking of when you're seeing this? Because this has been a very favored stock, a darling of the street, so to speak. What would be your concerns in this space?
Look, so I have huge respect for Eternal, the company, and the management team, etc. It so happens that I'm the analyst covering Eternal as a stock. And what we've been really doing in our numbers is, just to give you a flavor, is that once we've been meaningfully expanding top line, that expansion in top line has been accompanied by a commensurate significant expansion in losses, right? So we've been cutting margin estimates. And I think that risk about lower margins is relevant both in quick commerce and in food delivery. In food delivery, it's more of a reflection of the fact that you are at a point where take rates are high. The ecosystem is kind of pushing back and fighting back. So we'll see. You know, this entire margin expansion story was underpinned on take rates, but the opposite of that story is also true. In quick commerce, I think the nuance here, at least to think about, is unlike in food delivery, which is an agency business, quick commerce is an inventory turn business, right? So all this kind of growth is an equivalent of you setting up another kirana shop in a kind of digitized kind of smart format to cater to that growth. So this is an inventory turn business at a specific micro market. And the specific point we make is that the throughput per dark store gets impacted with competition. And that competition is rising and continue to kind of rise. And we're seeing competition here really from multiple dimensions, you know, whether it be JioMart trying to come back at this, whether it be kind of Flipkart looking to expand its kind of its dark store kind of program. Amazon is kind of coming back at this again. You know, Big Basket is relevant in that space. The entire offline ecosystem is not like just like sitting there. So I think the real problem statement, at least which we see for quick commerce, which is kind of what is underpinning a lot of these stocks and the valuations, is simply about, is there an economic profit at all to underpin these valuations? And we're not seeing that. So huge respect for the company and kind of what they're doing and the kind of TAM opportunity, but I don't see the economics both for kind of Blinkit or for Swiggy. In Swiggy's case, the problem is far more pronounced.
Aditya, we have about a minute left, but just trying to understand. Defense in flavor for the last 10 days. Global funds now, global defense funds having India allocation. So Insti money starting to move in. What are you advising your key clients to do? We have about a minute, but if you can give us your thoughts.
Yeah, so quite candidly, Neeraj, that's a coverage gap, if I may.
Okay.
Within our,
so leave that out.
Space.
Leave that out. Let me ask you something else then, Aditya. Capital goods again, selective positive coverage starting there. Are you guys also amongst that list?
Yeah, that's kind of the broader theme. I think this entire theme about consumption over capex, I think, is a great headline. I think we've got to be a bit more selective here on that kind of comment. What I would tell you is the following, which is that when I think about broader cap goods and industrials, there's clearly a big tailwind here which is supporting that space. What we are seeing and observing is a moderation in revenue growth expectations, which I think is realistic. Where we do kind of worry is that margin expectations for quite a few of these companies are still too high. So a large part of that kind of re-rating story underpinned by kind of better margins, better earnings, I think that's behind us. So like with most of my comments, I think we're being really, really selective. So I don't really have a comment such as overweight this sector or overweight that sector on a top-down basis. So like we are kind of really aggregating this from the bottom up to get to our kind of sector picks.
Okay. I just want to quickly, Suresh, just going through some of the focus stocks in your report. Very quickly, ICICI Bank are your growth leaders with visibility. Bharti, Tatacom, Titan, Trent, Marico, I see TVS, I see Uno Minda, JSPL, Ultratech Cement, quite a wide kind of bucket. Any common sort of theme that you're seeing, and a few of them, of course, in the consumption trend?
I think that's kind of the point of the story, is that so it's very specific, rather than it being that this sector is going to en masse see a lot more growth. And again, just that I would have loved to kind of insert that bullet point itself. What I'd love to say is that, within our 150 stock coverage, these are the 10 stocks where we're seeing earnings going to be upgraded, in FY27, FY28. But not for the lack of trying, but we shoot the trees fairly hard. We could not come up with that, right? So the way we frame this is that the next level down is about where we have strong growth and where we have visibility on the growth. And we'd be looking to kind of index more in those kind of spaces. We also have another category where, like some of the large cap names like Reliance, Levers, for example, growth has been absent. We do see now maybe a point where growth kind of inflects and kind of revives a bit. That again lends a little bit of support. But yeah, so I think the real theme there was about we're really calling out or indexing heavily towards names and stocks where there's a good thematic exposure, there's a bottom-up kind of story, and we have visibility. It's not really a case of earnings surprise in the upside.
Thank you so much, Aditya. In fact, in his growth revival list in this report, there's RIL and Hindustan Lever. In the negative surprises are Eternal, DMart, I see TechM, and Max Health, among others. Thank you so much, Aditya Suresh, for speaking with us today. Abneesh Roy joining in for more on this is Executive Director Research, Nuvama Institutional Equity, someone who tracks the space so closely. Abneesh, great to speak with you. Just, on the core question, if ever there was policy momentum required for a space, FMCG has definitely received it. Why has it not translated in your view?
Yeah, thanks and good morning. Good questions. See, firstly, if you take any stock index, the issue is there will be some outperformers, some laggards. So that will not give you the true picture. You highlighted that, yes, some laggards like Varun Beverages. So we have been highlighting the Campa Cola risk, and the weather has been quite on the challenging side for Campa Cola and cola categories, even for Pepsi, etc. Because last 2 quarters we have seen very unseasonal rains, and this quarter also we are picking up that overall demand for the summer categories like cola, for beer, for some of the HI, etc. Even for some paints also, slight impact will be there because of very high rains in Q2. Second, if you see within the same sector, Britannia has done so well, and Tata Consumer, Godrej Consumer, Marico. So you have to see stock by stock and not the index. In terms of outlook, you're absolutely right. Whatever could go right from either God or from the government, I think everything has happened. So we have seen also monsoon in most parts of the country. It has done well. Of course, there is a flooding in Punjab. There is a flooding in Rajasthan. There is a big deficit, almost 25-30% deficit in the monsoon for Bihar. But I will say monsoon in any year, it's never a perfect. So you have to see the broader picture. Broader picture is that overall country will see more rural consumption boost. Now, the third point is, if you see last few quarters, urban demand, especially in the mid and lower, has been challenging. So because of this latest GST rate cut, I do expect that many FMCG categories will see boost. Coming to a specific point, what are the challenges? See, challenges are there. We are seeing this very quick timelines are there by 22nd September, which means in the next 6 days, we have to see the rollout of the new pricing. But government has also given that the existing packaging can be used. So you can just put the sticker and do that. We've also seen Hindustan Unilever kind of company come out with full page ads where they are saying on the affordability. So my sense is consumption will pick up because of three reasons. One is 5 rupee, 10 rupee, 20 rupee price point. Clearly, there will be a volume boost for every category where GST rate cut has happened. I think the real benefit long term will be in terms of the snacks and biscuits category, because that's bought as a pack. Second, of course, will be affordability. Suddenly, if the shampoo becomes affordable by 12-13%, and then the soaps also becomes affordable, you will see both grammage addition at the 10 rupee kind of a price point and affordability. So there will be customers who are earlier down trading to regional brands, to smaller brands. I think they will come back to their favorable brands because now they can afford it. So yes, I will say that this is a good buying opportunity in some of the FMCG stocks. Our topics will be essentially, yes.
Abneesh, sorry, can I just ask you? I mean, if I kind of expand the horizon slightly, right, and you understand this so well, so I want your insights here. That the thing that we hear from the buy side guys is that because it was a high ROE, high ROC sector, right, and it was not attacked, the distribution wasn't attacked. Now regional brands, online brands, etc., are coming in and attacking individual verticals of large FMCG names, which are also large verticals by themselves, and therefore can serve as a business for new startups or younger companies. Can this continue for the next few years, wherein we do not see pan-India giants necessarily having the size and the distribution advantage, and therefore their revenue growth, their ROCs, etc., and their margins continue to come off over the course of the next 5 years, and therefore their multiples as well might contract from where they are right now. They're already lower than what the average multiples were for the last decade. Can maybe those also go down lower?
No, I don't think so at all. India will not follow the US model of D2C taking market share from legacy player.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Good evening. You're watching The Big Question on NDTV Profit. I'm Vikram Solar. Now, if you've been stuck in Mumbai traffic lately, and let's face it, who hasn't? You may have wished that your cab could suddenly shrink into a two-wheeler and weave through that chaos. But, well, now Maharashtra's Transport Authority has taken this step in that direction. They've just granted provisional licenses to Ola, Uber and Rapido to legally run their bike taxis in Mumbai. They fixed the fares and they're giving these long overdue clarities into what was so far a rather unregulated service. Now, the question is, why is this big? Because, well, bike taxis are pitched as the next big disruptor in urban transport. It's cheaper than cabs, it's faster, wherein it comes to last mile connectivity. It is potentially a new source of jobs as well. And Rapido already claims more than 50 million active users. It has eaten into Ola and Uber's market share as well. In fact, one research report I was reading says that the bike taxi industry has a potential $5 billion market in India, and it's growing at nearly 50% CAGR. That's compounded annual growth rate. But like everything, there is always a flip side. Now, these two-wheelers that we are talking about, they account for nearly 45% of road fatalities in India. And the critics to this are arguing that this is only going to make the congestion in the city worse. It is going to compromise safety, they say. It is going to dent the livelihoods of Mumbai's already struggling auto and taxi drivers. And what about investors? They are asking whether fixed government fares and these rising input costs could actually make this a profitable venture at all for these cab hailing services. So tonight's big question is this: bike taxis in Mumbai, game changer for commuters or road to chaos? And to take this head on, we have an excellent panel. Supreme Court Advocate Ashutosh Srivastav is joining us, along with Karan Taurani of Elara Capital. We also have road safety expert Anurag Kulshrestha with us on the panel, with Dr. Kamal Soy, the member of the National Road Safety Council of the Ministry of Road Transport and Highways for the Government of India. And with us is the president of the Ola Uber Drivers and Owners Association. He's also the president of the Karnataka Auto and Taxi Federation. Tanveer Pasha joins us on the big question. But before we come down to the discussion, let's get a sense of what this actually feels like on the ground, on the road, I should say, when it comes to the speed, the cost, the convenience. So my colleague here at NDTV Profit, Charu Singh, hopped on to a Rapido, a bike from BKC to Andheri. Half the time, half the fare is the key takeaway, but here's Charu's ride experience.
I am an employee who works in BKC, and currently to look into this issue and see how well the service is actually performing and how much help it is actually giving to the customers, I am going to Andheri from my office, and with me I have a cab taxi driver with me, Mr. Abhishek. तो अभिषेक जी, बहुत बहुत स्वागत है आपका NDTV Profit में. हमसे बात करने के लिए शुक्रिया. जैसे आपके पास दिन में 10 लोग आ गए, उसमें से कितने यूजुअली मेल कस्टमर्स होते हैं, कितने फीमेल कस्टमर्स?
मेल फीमेल दोनों सेम ही आते हैं.
लगभग सेम ही रहते हैं.
सेम ही रहते हैं मैम.
तो ऐसा कोई एप्रीहेंशन नहीं है कि फीमेल लोग कम बाइक बुक करते हैं?
नहीं मैम, दोनों सेम है. मेल फीमेल दोनों सेम ही आते हैं. कभी कभी ऐसा होता है कि 5 से राइड सिर्फ गर्ल्स का ही मिल जाता है.
और किस किस एरिया में सबसे ज़्यादा राइड्स आती हैं, मतलब कौन लोग सबसे ज़्यादा बुक करते हैं?
मैम सबसे ज़्यादा BKC हो गया, बांद्रा वेस्ट हो गया, फिर सांताक्रूज ईस्ट हो गया. सांताक्रूज, बांद्रा, बिलेपाले, अंधेरी में ज़्यादा राइड आता है मैम.
आप मुझे बताइए कि क्या कहते हैं, ये ऑफिस गोअर्स ज़्यादा आते हैं?
जी मैम, सुबह 7 से लेके 11 बजे तक काफ़ी ऑर्डर रहता है.
तो मेजरली आपका जो काम होता है वो दिन का रहता है, क्योंकि ऑफिस वाले लोगों का आना जाना लगा रहता है.
और फिर शाम के टाइम हो गया 7 बजे 6 बजे आसपास.
अगर मान लीजिए मुझे BKC से अंधेरी जाने में 1.5 घंटा लगता है, ठीक है, तो मुझे बाइक पे कितना टाइम लगेगा अगर गाड़ी
35 मिनट मैम. 35
मिनट से पहुंचा देते हैं?
जी मैम जी.
और क्या कहते हैं, पेमेंट कितना कम रहता होगा एक कैब से? लगभग आधे के आसपास.
आधे के आसपास रहता है मैम, आधे के आसपास.
तो जैसा कि आप लोगों ने सुना, these bike services are helping office goers mostly, and they are hailed mostly in areas like Chembur, Bandra complex, Kurla, and also the amount of time taken to reach from your house to office reduces by almost half, and so does the price. So I see this as a win-win situation for almost all office goers.
Well, there you have it. A bike taxi ride in Mumbai. What it actually looks and feels like. It is faster, it is cheaper, it helps office goers. That last mile connectivity is an important one. But the question is this safe? Is it sustainable? Is it legally watertight as well? Let's put that to the test. Our panel tonight is going to tell us exactly that. Anurag Kulshrestha, I want to ask you that first. These lakhs of bike taxis that may actually get added onto our roads, Is that going to help congestion, or you think it's going to worsen the city's traffic mess? Because those supporting them are arguing that bike taxis, they ease the last mile connectivity. We saw that as well. And the critics are saying that they add to congestion, they add to chaos. Where do you stand?
Yes.
Go ahead, sir.
It will really create a kiosk on our roads. As in a number of the cities, we have seen the e-rickshaws and all. And second thing, these are completely unsafe also, as you have seen your reporter without helmet over there. So it's very much typical for the safety of the passenger as well. And as well as this is a last mile connectivity, I just want to raise up one point. What does it mean, last mile connectivity? Whether these bikes will be plying on our main roads also? If government is not coming out with a policy where these bike taxis will be plying, then it will really create a very much difficulty. And second thing, the problems. We are having a uniform traffic speed. Nobody can run away at a high speed out of the traffic. If they are claiming, or if they are saying like this, 1.5, it is taking 1.5 hours, but they will drop you within 35 minutes. Where are the ways? Are they having another roads for the taxis? Are not they flying on the same traffic with the same speed? It means that they must be like doing the rest driving and all.
No, we are talking about traffic jams. Anurag Kulshresht, we are talking about jams that you're stuck in for 90 minutes. Two-wheelers seem to crisscross and they kind of move their way into through traffic very quickly. And commuters are saying, why shouldn't we be entitled to that choice?
That's true. It means that they will be doing the rash driving, zigzag driving. It will create really a problem. It is, although you can see that national figures, 47 to 48% bike users are dying on our roads. So that will really create a problem, but also along with this, enforcement system as well as monitoring and evaluation system must be applied all together with that.
So you don't...
Because this is not just a policy matter, you leave it and you are getting the permission. That's it.
The permissions are given, but the rules are also there. Ashutosh Srivastav, do come in on this. You're a Supreme Court advocate. Tell us, until now, bike taxis, they were in a regulatory grey zone. Now the state's provisional licensing, it settles the legal questions for one. But do you think it's still open to challenge? The questions about how you're going to implement the rules when it comes to safety, when it comes to checking the qualifications of the riders, all of that, is that going to be watertight? How do you expect that to work?
See, the government has come up with the new rules, under the Maharashtra, bike taxi rules 2025. And they have included many of the provisions, as my learned friend just now questioned, as to in which area these bikes will be allowed as taxi to ply. So this is actually the Mumbai metropolitan region, which is mentioned in the same rules. And it further says that there has to be proper permits of all these two-wheelers, and obviously the fitness of the vehicle and all will be checked. At the same time, the driving licenses have to be commercial driving licenses for the drivers who will be riding these vehicles. And thirdly, that their criminal records will be checked. The police have to, verify. They have to check the verification of all these drivers, whether they have any criminal records for the safety of the passengers. So, and fourthly, there will be badge also which will be given to them so that they can be identified. So I think the precautions and measures have been implemented by the government this time, because if we see, this is the new Gazette notification. If we go back in January 2023, there was a clear notification which barred these kind of, vehicles from...
And yet they were running.
For the commercial purposes.
But Ashutosh Srivastava, they were still running at that point in time. Yes. So they were in this legally grey zone. Yes, that's what many of the critics are saying, that if they got away with that, then what are the chances that what's in the rule book now is going to get implemented?
Following any due process of law which has been implemented now, and many FIRs have also been registered, many actions have been taken against them, and even the apps were active, without any such licenses. So now at least the government has come up with certain rules and regulations to be followed to make it somewhat easier.
Right.
I think it will be beneficial for many of the students or the people who cannot afford very expensive rides, or maybe to the areas where the cars or maybe the buses cannot go. There are many such areas in Mumbai metropolitan region. If you see, if one has to travel from Fort to some lane, maybe in the Church Gate or whatever nearby area also, it is not that easy, and there are very much a lot of parking issues also. And I think it will reduce some of the four-wheelers as well. If say there is one person or a student who has to go and attend or to reach to some one place, so that person is not required to take a car, and unnecessarily for one person that big vehicle is going and the parking is an issue, and then it is occupying more areas on the road.
You're thinking this is going to ease congestion? At the broader level, you think it's going to ease congestion?
Definitely, but I agree to my friend to the extent that yes, there has to be proper maintenance of the roads, and because there will be rains at times, there will be maintenance on the roads. So obviously the safety of the passengers are equally very important. There would be women also traveling. There would be students who will also be traveling.
So do you see those checks and balances over there? Because when it comes to checking criminal background verification of riders, for example, insurance, vehicle fitness as well, do you see all of that in the rule book, and do you see that possibly getting implemented as well over here, going by our experience with four-wheelers as well in the past?
Yes. See, this is what, as I said, this is just the start of a service.
Right.
And I think with these so many rules, regulations coming in, it will ease the necessity of many of such, passengers who wanted such kind of services.
Sure.
But yes, I do agree that once you implement any law, there would be many new requirements coming in, many new situations which you will come across, and you will feel that,
but you still feel this is the need. But let me go across to Tanveer Pasha and ask him. Tanveer Pasha, these low regulated fares, these are regulated fares now, right? So aggregators possibly are going to absorb the cost, or is it going to come down to drivers? Because when you're talking about a basic fare of 15 rupees and then 10 rupees per kilometer, I'm wondering if the drivers are going to bear the brunt when you're going to have those kind of strictures on the fares. They are being regulated.
See, the regulations are just for a book and for the eyewash for this gig economy companies especially. Because first thing I would like to go clear, and it is a big question from so many years to years for me, without any rules and regulations in the country law book, because we are law-abiding citizens of this country, we respect the law of this India. Whatever constitution has given, if there is no permission for some such businesses, easily these gig economy companies, example IIT and other biggest university people can come and introduce new, which is not in the law book. They can raise the thousands, crores of funds, and they can ask for the regulation. This is my biggest question today.
Let me try and understand this, Tanveer Pasha. You're saying that innovation is coming at a cost over here, and that regulations can be created, but that's only for the books. You don't see them getting implemented, and that's what you're calling an eyewash, is it?
No, the regulations, after regulations, they don't even follow the rules and regulations, I know. Because in the 2016, Ola, Uber, even Karnataka state government also have given aggregator license. So far, they have not comply with the rules and regulations. Still, there is no safety for women in the Ola Uber cabs, even being a union leader. How can we start? There is no any customer care support. There are so much loopholes. They don't follow the rules and regulations. This is called gig economy companies do. So that is why we oppose always. Bike taxis are compromising with the road safety as well as women's safety, everything. And also it compromises the auto and taxi drivers' livelihood. It is compromising the livelihood and their earnings.
But then they would turn around and say that what about the regulation for the existing ones as well? Because you've had a system that long, there is more need for urban transport requirements are rising in a city like Mumbai. Now, how are you going to answer that with our existing provisions? Our current auto...
How can you say that existing provision? See, this was not in the rule book. Bike taxis were not in the Motor Vehicle Act. Now they came, illegally they started these activities. Illegally they started. After 8 years, they're asking for a regulation. Asking for a regulation after 8 years, which was illegal. There was no any rule book. There was nothing in the rule book.
But aren't you glad that they're legalizing it now?
No, it shouldn't be legalized now.
Why not?
Why are they legalizing?
Why not?
No, they shouldn't be. Why?
Because we are creating a new system that is going to create ease for commuters. Another option is being offered to commuters in Mumbai, which is a congested city. This last mile connectivity is the need. Also, it's being available at lesser cost to commuters in a city like Mumbai.
To create something new, we have to propose, we have to discuss the positive, negative advantages and disadvantages first. Then we have to propose and we have to get the licenses.
So what are the biggest disadvantages according to you?
From 8 years.
What are the biggest disadvantages? What are the biggest disadvantages?
Disadvantages is mainly compromising the safety issues, and second thing, the complete dependent, like paying lakhs investment to auto and taxis. Their entire livelihood, their entire family is dependent on the transport system, whatever they do every day, their duties. Based on their earnings, their entire life is dependent. Here in the bike taxi, part-timers can work. Even if he is earning 1 lakh rupees of salary, he will enjoy 2 hours working as a bike taxi rider.
Let me take that across. To Dr. Kamal Soy. As someone who's worked on the Transport Council, Dr. Soy, do put this in context, because strong critique coming through from existing auto drivers, from taxi drivers, as far as safety issues. They're saying that this was almost an illegal system that was running in the grey area, and suddenly you're going to create these rules and legalize the entire system of bike taxis. How is that valid is the question that is being raised by Tanveer Pasha.
I tell you, yes, he has raised a valid question. But now we all have to understand that the mobility is very, very important in the cities like, in the congested cities like Mumbai. Now, if you look at last mile connectivity, we do not have much in the metro cities. Mumbai is the most congested city as far as the traffic is concerned. And when Pasha was speaking, he has raised few very valid question of safety. In India, we lose about 40% of two-wheelers in the road crashes. So that is too big a loss to be taken, you know.
Yes.
But here, we have to create an ecosystem where the taxis also moves, auto rickshaws also moves, and this bike taxi aggregators also move.
Right.
There are few places in Karnataka and all where the bike taxi was banned, then that ban was lifted afterwards. The last mile connectivity, and apart from this, we are giving lot of jobs to the people. Now we have to understand this can really be a game changer in the cities like Mumbai.
Right.
So I believe we should not be apprehensive of this. We should no one is going to snatch anyone's
livelihood,
and it is going to complement our mobility.
Allow me to get the economics of this right. Karan Taurani is also with us, and he understands this entire space. I'll try and go across to him in a moment, but it's an important piece as far as Rapido and these private companies are concerned. When we're talking about regulation, there is also the possibility, Dr. Soy, that the government will have a certain kind of stake in the kind of aggregator services that are coming through. Whether or not that picks up momentum in the future, one will have to see. But when you're talking about certain services that the government might bring in by way of certain apps, one wonders if there is going to be a better level playing field for all players when you're talking about the competition that is rising. Karan Taurani, what do you make of this? At this stage, we're seeing a Rapido lead. You're seeing an Ola and Uber catching up. But now that you have regulatory clarity, is that going to be a positive catalyst for all these players in the business?
Hi, Vikram. So I think it's very important, for this business actually to,
pick up from here on. If we are all talking of digital business seeing acceleration, we are all talking of convenience from a consumer standpoint, and all of it will actually depend in terms of how the gig worker economy actually scales up. So one is in terms of the supply of number of workers in the economy that we have today. Can that continue going ahead? Can we have more gig workers coming in the ecosystem who are ready to do delivery of food, e-commerce, quick commerce, everything put together? And second, of course, is the convenience to the consumers, which obviously we have seen over the years that how digital businesses have provided convenience to the consumers. And third, of course, is the safety as well in terms of these delivery people when they go and do the delivery or do the last mile rather. So I think there is ample scope for this to coexist. But yes, certain rules, regulations could come in as far as the safety measures are concerned, whether it could be wearing a helmet or providing the basically how the vehicle is in terms of good, bad, the condition of that, which can ensure the safety of the consumer or the product as well put together. But net, I think this is an important part. One cannot rule out the fact that if you want convenience, it will only come at the cost of these gig workers who are going to drive the digital economy in India.
But Karan, tell me, because these fares now are getting fixed and there are rising input costs as well, whether you consider fuel or insurance or incentives even to these bike taxi riders, do you see them improving margins for aggregators, or do you think their unit economics because of bike taxis might worsen?
So I think in terms of unit economics, it's very clear. A rider on average makes around 600 rupees, 700 rupees on a daily wage basis. You can put it over here that 15 to 20% of this cost is the fuel cost and the maintenance cost of the vehicle, and the balance is the income that the delivery boy or the gig worker basically earns. Now, there are multiple models wherein this thing works in. So for a quick commerce delivery, which the lead time is 10 to 15 minutes, the cost of this delivery could be higher. There are also variables which are paid out to these delivery gig workers, which could be because of the festive season, it could be because of night shifts, it could be because of peak times, rainy season, and so on and so forth, and also because of achieving throughput in terms of number of orders.
Right.
So I don't see any issue in terms of unit economics being tested, because it's a demand-supply situation right now. So as I mentioned, for the next 3 to 5 years, we do have ample supply of talent coming in terms of gig workers.
Right.
Once we see a situation wherein the supply actually comes down or supply actually plateaus, that is when the economics will be tested, because you have to not forget the fact that these businesses are actually doing well in India because delivery cost is very low. Globally, if you look at the delivery charges, it is anywhere between 7 to 8 times as compared to what it would be in a market like India.
True.
So it's very important for the e-commerce businesses to kind of piggyback on gig workers, and it's very important to keep this supply coming in.
Yeah.
And net, I think these small things like in terms of giving this 2-5% benefit in terms of medical benefit or some other insurance benefit to the gig workers will not have a big negative impact on the economics of these internet businesses, because they're all about scale, and these small things won't matter much in terms of their profitability.
Right, so it is all about scale, but then when you're talking about the kind of fares that we are looking at right now, 15 rupees base fare, 10 rupees per kilometer, from a consumer perspective, Dr. Soy, how fair is this fare regulation? How necessary is it right now as you see it, and how much of this poses a risk to making this entire model that we are talking about sustainable in the long run?
You see, as far as the fare regulation is concerned, it was a need of the hour that you have to regulate the fare.
Okay.
But my concern is the safety of the co-passengers, whether they'll be carrying another helmet in their hands while they are doing the.
How do you ensure that?
Yeah, that is something very, very important. All the aggregators, they have to ensure that there is a helmet on the back, there is a GPS system working, and the strangers who are going to be transported from one place to another, there can be a safety risk into this.
Right.
Unless we have the safety protocols and the safety SOPs in place, this can create a lot of chaos as well. And I'm sure about it. There were incidences of Ola bikes catching fire at many places. So those all kind of safety protocols have to be followed.
Let me ask Ashutosh Srivastava about this. If there is an accident, Ashutosh Srivastava, liability is going to be a big question. Are India's current laws on insurance and aggregator responsibility strong enough to protect commuters?
Yes, yes. If you see our Motor Vehicle Act, it already mandates for any taxis to have the insurance of the vehicle, of the driver, and also of the passengers. So obviously the insurance part is mandatory. Then third party insurance is anyways it is mandatory in our country. So that will take care of. Then GPS system is also mandatory, which has to be there for the safety of the passengers. So I think there are already many aspects which are apart from that, there are penal charges also. If you see BNS, Bharatiya Nyaya Sanhita, in the new law also they have taken into consideration that if there is any accident or whatever, so what are the rules they have to follow. They have to report to the police station immediately in case of any accident. So all these aspects are already there.
Right.
So I think the rules which have been framed at present will further enhance the usage of the bike taxis for the people in need.
So let me ask Tanveer Pasha, since we are running out of time, I want to quickly ask him, Tanveer Pasha, if your members were allowed to participate in bike taxis through the same apps, would you accept them as part of the system?
No, our drivers will never accept those
Why not?
bike taxis. Even in Karnataka, why not? Because we are having our autos and taxis. We believe in this transport system. We don't believe in bike taxis where it is not safety, as well as this whatever the gig companies came to just make their valuation games. This is nothing else. It is just a valuation games, and you do whatever the regulations. They will rule their rules.
Right.
They will not go and follow any of the government rules.
Fair enough.
You can take my words here in this debate, and you can go after a few days for checking out whether they are following or not.
So that is a big question. Safety is going to be a concern. Implementation of rules has always been a big ask, but bike taxis could be still the fastest way forward for Mumbai's commuters today. It could be a risky detour when you talk about safety and livelihood and legal chaos as well. But yes, the balance between innovation and enforcement are going to decide whether this becomes a success story or a tale of caution. My thanks to my panel, Dr. Kamal Soy, Karan Taurani, Ashutosh Srivastav, Anurag Kulshresht, and Tanveer Pasha. Thank you for helping us unpack this complex but vital debate. I'm Vikram Solar, and this is The Big Question. To stay with us on NDTV Profit. Good evening.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
Your Money Matters here at NDTV Profit. I'm Mahima Vachharjani. Well, there's certainly a good news for people who have not filed their ITR yet for today. The CBDT has extended the deadline of income tax filing just by a day from 15th September to 16th of September. So if you have still not filed your returns, you still have a chance. Go ahead and file your returns today to discuss as to what are the things that you need to keep in mind with regards to your ITR filing. Gargi is joining us with more details.
Missed filing your ITR and worrying about the penalties? Well, you can finally catch a breath. Yes, the deadline to file income tax returns for FY25 has been extended, but just by one day. The Central Board of Direct Taxes, or the CBDT, has clarified that taxpayers now have until September 16, 2025 to file their ITRs. So if you haven't filed yet, here's a quick refresher on how to go about it. First, log in using your PAN as the user ID and your password and head over to the ITR filing section. Then select the right assessment here, choose your filing status and pick the correct ITR form. Now, review and confirm all your information carefully. Pay any pending tax dues, hit submit and don't forget to e-verify your return. Now, just a couple of reminders. Don't forget to declare all sources of income, claim eligible deductions and file on time. Miss the September 16 deadline and you could face late fees of up to 5,000 rupees. For incomes below 5 lakh, the penalty is capped at 1,000 rupees. Plus, filing late means losing benefits like carrying forward certain losses. Oh, and those WhatsApp forwards about another extension, they're not true. September 16th is the final call. So if you've been procrastinating, this is literally your last chance to avoid penalties and keep things hassle-free. Don't wait till midnight, get it done as soon as you can.
All right, now the ongoing hot debate, which has in fact always been the debate, is whether to choose between a government bond or an FD, and where are the returns better, what are the taxations looking like, etc. And we're going to discuss this with Lakshmi Iyer, who's the Group President of Investments and CEO of Bazaar Alternate Investment Management Limited, joining us now. Lakshmi, hi, thank you so much for taking out the time and joining us. My first question to you is, if somebody who is not invested in government bonds at all, and if you would want to suggest the person to go ahead and invest in the bonds, what will be the aspects that you would be looking at, and versus an FD, how will you stack up a government bond?
Sure thing. I think first and foremost, the most important consideration that he or she should keep in mind while investing in Government of India securities, that it is a sovereign risk. What does sovereign risk mean? You do not have to risk your loss of capital. I think that is the first and foremost consideration, which paves way for investors, including retail investors, to look at an instrument like this for investments. The second most important thing one needs to keep in mind is that when you are making an investment in government securities or government bonds, it is subject to the market fluctuations, in the sense that if you buy the bond today and if there is a movement in interest rates, the reflection of that happens in the prices. So accordingly, that is called the mark-to-market risk. However, if you are holding this to maturity, you do not have to worry about that. It is very similar to the fixed deposit that you invest or that you make your investments into. So I think these are the two most important considerations. And last but not the least, Government of India bonds are liquid. There is a vibrant secondary market where you can enter in and exit out. So that is the, I would say, biggest advantage that you have when you make investments in government bonds.
Makes sense, Lakshmi. And how about the returns? How would you compare returns between a government bond and an FD?
So there is no cookie cutter approach to this, because it depends on which tenure or which maturity that you are investing these bonds into. Typically, when investors do fixed deposits in banks, it is usually for anywhere between 1 to 5 years. Now, in that bucket, if you see the Government of India securities, today the 10-year Government of India bond is yielding closer to 6.5%. Now, this pays you coupon twice in a year. And therefore, if you annualize this rate of interest or this coupon or this yield that you are getting, the yield goes up by another 15 to 20 basis points, or 0.2% in this case. So I would say, given where we are in terms of interest rate scenario, and the expectation that there is a reasonable chance that yields will come down in the coming quarters, you are better off buying a bond like this, or maybe quasi government bonds like these, and running them for the next 2 to 3 years. The potential of it yielding you better than fixed deposits in today's market scenario is pretty high.
And since you mentioned that, considering the current scenario, can you help our viewers with a perspective as to what factors from a macro perspective govern these bond yields?
The first and foremost is the assessment of growth, which starts from the global growth and then percolates down to India growth. Are we at a very torrential or a very, very fast-paced growth scenario globally? The answer is no. So typically when the growth globally, as also in India, tends to, I would say, remain constant or slow down a little bit, it is favorable for interest rates. So that is one. So which means expectation of lower growth is equal to expectation of lower interest rates, point number one. Second is inflation outlook. The more you are, I would say, expecting inflation to come down, again, I'm talking about India, same is true for the globe, the expectation of lower inflation fuels an expectation of lower interest rates. So again, there is a direct positive correlation. So these are the two key factors that one tends to observe. And liquidity, the higher the liquidity, if there is more money in the banking system, the rates tend to be lower. So that is an inverse correlation. So these are the three macro plus micro factors that investors definitely should consider before making investments.
Interesting. And, both are seen as safe. But do you think that one of these is safer than the other?
In terms of certainty, if you want an assured rate of interest, then nothing beats the fixed deposits. But if you are willing to subject your investments to a little bit of market fluctuation, not really impacting your capital. Is the capital at risk? The answer is no. Is there going to be volatility in your investments? The answer is yes. So therefore, I'd say that from a risk-reward trade-off, in today's market scenario, you are better off putting in your money in direct government bonds, or as I said, quasi-bonds or corporate bonds, as the case may be.
Okay. And with regards to the tax angle, how are these two taxed? Is there separate provisions? And considering the taxation point of view, because at the end of the day, it's going to be taxed in the hands of the investor, right? So then, removing that, what is the kind of returns that you expect from both of these?
No, so I'd say, there are gilt funds, for example, in the industry, which are offered by mutual funds, which do exactly the same thing for the retail investor, which is buy these Government of India securities. And there, of course, you are in a pooled vehicle. So this is one of the very attractive ways of investing, assuming everything remains constant. Do these funds which participate in gilts, or as I said, if you are the know-it-all investor, you can go directly. I would say, irrespective of the taxation, what you need to look at is what is the cycle of interest rate that we are in today, and can you be reasonably confident of doing or achieving at least a 0.5% post-tax over a bank fixed deposit. At least in today's interest rate scenario, that is looking doable. It's not extremely impossible. But as I said, the caveat here being everything remaining constant, your portfolio or your investment will be subject to a mark-to-market fluctuation, which is what we call the interest rate risk.
Okay. And what is the accessibility like when it comes to these government bonds? I mean, if you can lay down a step process for our viewers, if they want to go ahead and buy these, corporate bonds or quasi bonds, what should be the ideal process of making an investment into bonds?
So there are two ways to do this. If you are the IKEA DIY or do-it-yourself investor kind of mindset, then you have RBI's facility of making these government bonds available for retail participation. So you can participate through that. There is an account opening process which you need to follow. For everyone else, I think there is a mutual fund route which is so beautiful, which is available for all of us as retail investors to participate in two forms. One is put in as low as a minimum of 5,000 rupees, or you can do a systematic investment plan. It is typically recommended or suggested that you follow the lump sum investment, usually in fixed income or in these kind of mutual fund avenues. But yes, the government of India participation can definitely happen through both direct route, which is available through Reserve Bank of India route, or through the gilt route. Both of them are absolutely okay and easy forms of investments for all of us.
And Lakshmi, is there any risk of capital loss on these government bonds despite of them being risk-free?
No, it is serviced by the government of India. So it is the sovereign risk, as I mentioned to you. As you go down the rating curve and when you flip these investments into corporate bonds, which are issued by corporates or private sector entities in India, that is when the layering or the intensity of the risk on the credit side also starts materializing. Typically in AAA, it is considered the least credit risk. And as you go down the credit rating curve, you are adding more credit risk to your portfolio. But in Government of India securities, that is not applicable.
Okay, now you already mentioned that this is the right time to go ahead and invest in bonds. My question to you would be, if there is somebody who's already invested in FDs and their FD is maturing, do you think it's time to shift from an FD to a government bond? I mean, is that the right thing to do per se for investors whose FD is maturing?
Today's market scenario, I would definitely consider one to look at, actively evaluate a switch option. And I mentioned to you the reason. The banking system is reasonably flush with liquidity today. And remember what I said earlier, the more the liquidity, rates tend to head lower, and therefore it is highly unlikely that the rates at which you had locked in your previous fixed deposit, it is very unlikely that you will get similar rates right now for the same maturity. So you could be better off evaluating an opportunity in doing a gilt or a government bond fund or investing directly. Both the options are absolutely kosher and available for all of us today.
And one last question to you. What would be the right portfolio fit when it comes to these government bonds? What percentage of the total portfolio should be a part of the government bonds?
I'd say if you are, actually flipping your FD money, can you theoretically put the entire, whatever your FD kitty was, can you put that into government bonds? The answer is a definite resounding yes. You get the additional benefit of liquidity, which is not really available in fixed deposit. Of course, there is breakage, etc. possible. Some of them with a penalty, some of them without a penalty. But I'd say that this is a very seamless way of owning. And unfortunately, and good you brought this point out, unfortunately, it is lesser known. So I think the more it starts getting propagated, the more you'll find takers, but you have to withstand the interest rate risk. But as I said, if you are an FD mindset investor and holding this to maturity, then you don't have to worry about that as well.
But just want to understand, for example, if somebody is building a portfolio and wants to diversify, what percentage of their total portfolio should be in bonds?
I would say that even if you're building a 100%, say, a debt portfolio, you can have even up to 50% of your allocation into these kind of strategies. And the remainder of 50% could be a combination of corporate bonds, maybe selectively FDs, which could be probably, even in fixed deposits, you have NBFC FDs of good quality credit, which tend to offer a higher rate of interest. So a combination of that could be the balance 50% of your portfolio, which will also help you to augment the yield. And at the same time, it will give you reasonable certainty of your income. So I think these combinations in whatever form and shape, depending on your risk appetite, can certainly be used.
All right, that makes sense, and that, by the way, viewers, should be your total part. The division that Lakshmi talked about should be your division in your fixed income part of your portfolio. Keep that in mind. All right, Lakshmi, thank you so much for giving us those insights. In fact, I'm sure that this was very helpful to our viewers who are looking to invest in government bonds. And thank you so much for taking our time and speaking with us at NDTV Profit. Okay, so now we've talked about government bonds versus FD and which one should you choose, and we've already concluded that one. The other one to keep your eye out on is something that AMFI has proposed recently, a mutual fund voluntary retirement account scheme, which is very similar to the 401k plan which is there in the US, if you've heard of that. If you've not, we're going to do a detailed conversation of what this new development is with Mrin Agrawal, financial educator and founder at FinSafe India, joining us now. Mrin, hi. Thank you so much for joining us. Before I go on to the details of what this new development is, just give us a perspective of what is actually being proposed by AMFI here. What is this new development?
Thank you for having me, Mahima. So essentially what AMFI has proposed is a mutual fund voluntary retirement account, wherein essentially it's a retirement scheme. It's a voluntary retirement scheme where an individual can invest. There's also like an employer option, so it can be employer driven like how the NPS is at present, or the individual can decide to invest on their own. And the benefit really is that you'll get a variety of investments to basically choose from, which you can choose from based on your risk profile. And the idea is to basically, deepen the retirement savings in India, which of course today, there is a huge gap in the retirement savings of Indians. So the idea is to provide people with another scheme that they can consider for their retirement planning.
And Mrin, just want to understand as to how is this product different from the already available products in the markets that includes your pension scheme, etc., for retirement, which are already available?
Yeah, it doesn't look to be so different, honestly, Mahima, and that's where I think, the stakeholders will need to work towards seeing, how to keep this different. So at present, when I went through the details, what I find is that, of course, they're talking about tax incentives, and typical tax incentives that we see today are on investment and on withdrawals. The amount is taxable. They're talking about a lock-in, so similar to NPS where you have a lock-in up to the age of 60. They're talking about various investment options where you can choose between aggressive, moderate and conservative. So I think, what is like really important is that, there will need to be some differentiators that the product would need to have, because, if you look at it today, an individual, you have the EPF, like for a salaried employee, the EPF, which is mandatory. And then you have NPS also, which most employers are providing, right? So I'm not sure that people are really going to have money left over to invest into a third scheme. And I think then, if that's the case and employer is providing both NPS and the mutual fund voluntary retirement account, then I think it's going to be a choice between the NPS and the mutual fund, and hence there have to be some differentiators.
And considering that this is at a very initial stage, just want to understand, why would an investor go ahead and choose something like a mutual fund voluntary retirement account rather than going for an NPS or anything of that sorts?
So, I think, of course, tax breaks and cost is going to be a big consideration. So certainly, the NPS is extremely low cost, and I don't know whether, the mutual fund VRA, what sort of costs they're envisioning. I think one of the things that I was reading about the 401k is the fact that it, of course, is quite restrictive and it has pretty high fees. So I think, in India, if you have to make a product work, one, you certainly need to give nudges like tax breaks. And I think it'll have to be a tax break over and above what's already there. So, if you're going to say tax break under ATC, considering that a majority of the population today is filing under the new tax regime, that may not be enough to get a person to look at this. So you will need to see what is the sort of tax breaks that can be provided, because of course it's well known that, tax breaks work as very good incentives for people to start investing or to want to lock in into a long-term product, right? And the other thing is that it's very important. I think one of the key things that can really differentiate this product from the existing products in the market would be the flexibility on withdrawal, right? So like when you look at the NPS or even when you look at EPF, there are certain conditions under which you can do withdrawals, like for example, construction of house or medical purposes or education of child. or when you look at NPS, you do have the premature, the partial redemption or the premature withdrawal that's available, but you only get a percentage of the amount as a lump sum and the balance is invested into a pension plan. So I think one thing that can really differentiate this scheme from the NPS would be the flexibility to withdraw. And Mahima, we must remember that today a lot of people, and probably in the time to come, right? I don't think that many people are going to be working till the age of 60.
Absolutely.
So I think certainly the option to withdraw the corpus must be at retirement over having it at a specific age like 60, right? And that certainly, I think, could be provide a very big impetus to people to look at investing their money in the MFVRA.
So correct me if I'm wrong here. What you're trying to say is that for MFVRA, you will be able to withdraw money at any given point of time after the lock-in period. Is that reading correct?
I think right now, from what I read, they had mentioned 60 years. So what I'm suggesting, that since this is just at a white paper stage, I think one of the things that they should seriously consider, and Mahima, in my own experience of doing a lot of sessions at corporates and talking about NPS, we see that the NPS adoption level is pretty low. And one of the reasons is, of course, the lock-in, right? So I think, what I'm hearing a lot is the fact that I don't want the money to be locked in till 60. I should get it on the day that I actually retire. And I think that can be a very big product differentiator.
And do you think there will be also rules and regulations with regards to which areas you can invest in? I mean, from a point of view of, let's say, if this will be stock market perspective, large caps, mid caps, small cap, there has to be some allocation, in my opinion, because at the end of the day, if this is for your retirement, there has to be some certainty as to how your returns are being protected. Any view with regards to this aspect?
Yeah, I'm pretty sure that's going to be there. You have that in NPS as well. And I'm pretty sure that it's going to be there even with the mutual funds. I don't think it's going to be like an open slate. I'm sure there are going to be certain limits and restrictions in place.
Mrin, you talked about how NPS is still not adopted by a lot of people in our country. Just want to understand what are the issues that you're seeing with regards to where retirement planning is concerned, because even I've come across this, that a lot of people who are making a lot of money are unable to actually plan their retirement well. They end up losing a lot of their money that in fact that's a hard-earned money that they lose. What is your view with regards to that, and how can that be improved?
So I think it's just this predisposition, because people are really not thinking about the long term. Everybody is just thinking like really, really short term in nature, like, okay, next 5 years, for example, but really not beyond that. And, somewhere, there's a big reliance on EPF. For some reason, people feel that at least the salaried segment, which I basically deal with, believes that, you can actually just make your retirement corporate through EPF. And EPF is a great product, right? I mean, to get, 8% tax-free guaranteed return is a great investment, right? But the point is, it can only get you that much. And given today the lifestyle costs, and the inflation on these lifestyle costs, right? So you're looking at somewhere around 7 to 8% being your inflation on your retirement corpus, because that's what the lifestyle costs are growing at, right? So certainly you need products that are going to give you a much higher return than what you can get in the EPF, right? And I think, there's too much of over-reliance on just the EPF and people really not thinking long term. Also, there's this big hesitation, which I hear all the time. Like, people say, how can I lock in my money for 30 years? And I'm like, you're buying insurance policies and locking your money for 15 years. You don't have a problem with that. Why would you have a problem with a product like NPS or any other retirement product that is locked in, right? And they're all transparent products, which are actually, of course, regulated and monitored and stuff like that, right? So why would you have a hesitation in locking in the money, right? And the other thing that I still see a lot is that people still, while there's such a lot of noise about investing in equities, at the end of the day, we know that at a household level, the equity allocations are really low, and people are still basically investing in very, very safe instruments as far as retirement is concerned. So, other than EPF, probably people are still looking at safer instruments only. And I think these are the main issues that are there. And I do believe that there requires a drastic change in the thinking process, because one, the retirement age is getting lesser and the amount of money that you need is only growing. And if you haven't saved for it, then obviously you need to start saving in a very, very big way for it. So I think it requires a big change in the thinking process on this.
Absolutely, I agree 100% with you on this, Mrin, and that is a much needed message that we as a channel also want to pass on to our viewers. So thank you so much for those views, and of course thank you so much for taking out the time and giving us all those insights, Mrin.
Thank you.
All right, viewers, with that, we're completely out of time on this edition of Your Money Matters, but do stay tuned. More news and updates on the other side.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app. The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show.
So viewers, benchmark indices end the trading at the day's high. Nifty 50 wraps trade over a 150-point high around 25,200 levels. The 30-pack Sensex also followed the suit, ending with gains of over 600, exceeding the 82,000 mark. So broader markets have played in tandem with frontline indices. The small and mid-cap space recorded gains of about 0.7% each. L&T, Bharti Airtel and Kotak Mahindra Bank helped uplift the Nifty, while a few FMCG counters they've added a marginal pressure. M&M Eicher and ONGC were among the top Nifty gainers. On the flip side, Shriram Finance, Tata Consumers and Asian Paints were among the main losers. Barring FMCG, all other sectors ended in the green, with Nifty, Auto, Realty and IT leading the charge. The market breadth also ended skewed in favor of the bulls. Over 1,400 stocks have ended in the green. Now let's kickstart the show by looking at a stock that was buzzing away in trade today. Aegis Logistics posted their most significant single-day gain, since Margin. So bullish brokerage notes are fueling this rally, with volumes up a staggering 13.5 times their 30-day average. Now, this marks the fifth best session for Aegis in 2025. The momentum comes as two major players, JP Morgan and JM Financials, have initiated coverage on the stock. So JP Morgan sees a potential of 11% upside, while JM Financial is even more bullish with a target of 20%. So according to the brokerages, Aegis Logistics is ripe for a re-rating thanks to the high barriers to entry in the sector. Moving on, we have Canara HSBC Life, a prominent name in the insurance sector, is gearing up for its IPO. So this offering, however, will be, entirely an offer for sale, meaning that no shares are being issued. Instead, its three co-owners, Canara Bank, Punjab National Bank, and also HSBC, are all, selling a portion of their stake. So Canara Bank, which currently, co-promotes the company, is set to sell a 15% stake. Now, this move alone is valued at an impressive 1,800 crore rupees, which is representing about 1.7% of its own market capitalization. On to another counter that was buzzing away in trade. Jawaharlal Nehru Port Trust has signed a 30-year concession agreement with JSW Infrastructure for a significant 740 crore project. Now, this long-term pact is for the reconstruction and also mechanization of berths at the Kolkata port. Now, the goal is to enhance the port's capacity with a projected handling capability of 5 lakh TEUs, which is 20-foot equivalent units annually. So on the back of this pact, this counter was up about 2% in trade today. Now on to an update from the energy sector. NTPC Green Energy and its joint venture with Aircon Renewable Power have successfully commissioned a new 100 megawatt capacity. Now, this addition brings the total installed capacity of NTPC Green's portfolio to 7,372.575 megawatts. Now, the commissioning of this project marks another step in the company's expansion into renewable energy, which is reinforcing its commitment to India's green energy transition. Now we have Asahi India Glass, which is currently in the news as it has opened its qualified institutional placement, or the QIP. So the company has approved a floor price of 844.79 rupees per share for this offering. Now this move gives the company the discretion to offer a discount of up to 5% on that floor price to attract institutional investors. Next up, we have Suzlon Energy, which has landed its biggest order for FY26. Now, Tata Power Renewable Energy placed an 838 megawatt wind power deal. Now, this marks Suzlon's second largest order in history. The project spans Rajasthan using S144 turbines with 3 megawatt rated capacity. Suzlon also handles supply, erection and also commissioning. So it also offers 5-year operations and maintenance. The order pushes Suzlon's book to 5.7 gigawatt as of Q1 of FY26. Now this win highlights Suzlon's strong position in India's renewable push. Tata Power aims to boost clean energy capacity. Suzlon also eyes more growth in wind sector and also, amid this rising global demand. Sangvi Movers has bagged orders worth 292 crore rupees. The deals come from independent power producers for key construction work. Now, this boosts the company's project pipeline in the energy sector. So, work kicks off in Q2 of FY26 and wraps up by Q1 of FY27. So, as a leader in heavy lifting and crane services, Sangvi eyes steady growth amid India's infrastructure push. The orders align with rising demand for power projects. No major impact on the current estimates, but it also strengthens future revenues. So investors see this as a positive sign for the firm's operations. NCC has won a major contract from Bihar's Water Resources Department, a 2,090 crore order which covers the construction of the Barna Reservoir project. So work will span 30 months, focusing on key infrastructure like dams and canals. Now this deal boosts NCC's presence in water sector projects as well. So it aligns with Bihar's push for irrigation and flood control. So the company, which is a leader in civil engineering, sees this as a step to grow its order book. No changes to current estimates, but it also signals steady revenue ahead. Investors view it positively for NCC's pipeline. Next up, we have Mishra Dhatu. So it has secured a 136 crore order, which is boosting its open order book to 1983 crore rupees. So the company, which is a key player in special metals and alloys, expects another 700 crore rupees in orders for Q2 in FY26. So this new deal strengthens its position in sectors like aerospace and defense. So work on the order starts soon, aligning with India's push for advanced manufacturing. So no immediate impact on the estimates, but it also signals steady growth. Satvik Green Energy, a top Indian solar module manufacturer, launches a 900 crore IPO from September 19 to 23. So shares are priced at 442 to 465 rupees. The IPO includes 700 crore fresh issue and also 200 crore offer for sale. The funds will clear debt, support a subsidiary, and build a 4 gigawatt solar facility in Odisha. So with a 3.8 gigawatt module capacity and 69.12 megawatt EPC base, Satvik's revenue soared to 2,158 crore rupees in FY25, which is, with a 16.4% EBITDA margin. So despite growth, it faces competition, import reliance, and also execution risks. Megha Engineering secures a historic contract to build and operate India's first private strategic petroleum reserve in Padur, Karnataka. Now, the 5,700 crore project will significantly boost India's energy security by adding 2.5 million metric tons to the existing strategic stockpile. So the company has 5 years to build and 60 years to operate the reserve. So this will be a major milestone in India's efforts to strengthen its energy security. The project will also create new opportunities for Megha Engineering, which has largely worked as an EPC contractor for oil and gas firms. JP Morgan has cut India's concentration in its emerging market index, reducing the weight cap from 10% to 9%. Now, this move aims to improve the country concentration regional balance and also enhance the headline index yield, which is based on investor feedback. So the changes will be implemented in the first half of 2026, phased over several months to minimize the portfolio turnover. So the reduction will affect large bond issuers, including India, China, Indonesia, Mexico, and also Malaysia, with smaller nations like Thailand, Poland, South Africa, and Brazil benefiting from this shift. So this adjustment is expected to divert the investor flows towards these smaller economies as well. The Central Board of Direct Taxes is launching Project Satya, which is a groundbreaking AI-driven probe to track the tax evaders. Now, in collaboration with the Defense Research and Development Organization, the CBDT is introducing an AI-powered portal to analyze call data records and also the digital prints. Now, this innovative tool turns raw call data into instant investigative insights, which is mapping the hidden links beyond the financial records. It also tracks major social apps like WhatsApp, Telegram, Signal, and Source IPS, providing a comprehensive digital trail of the tax evaders. So this AI tool will be used in all the IT investigations, with the Bengaluru unit already onboarded, and a nationwide rollout is expected very soon. Insulation Energy arms bags an order for the operation and maintenance of the solar plants worth 113 crore rupees. Now, this LOA is for a solar power plant project from Jodhpur Vidyut Vitran Nigam. So the company is set to provide a comprehensive maintenance services. Now, in doing so, it will ensure optimal performance and energy output from the solar plants. This also includes regulator monitoring, cleaning, and repairs to minimize the downtime and also maximize the returns on investment. India's pharmaceutical export surges with several companies reporting significant growth in August 2025. So Laurus Labs export value has reached $37.4 million, which is growing 94% year over year and 6% month over month. So Divi's exports have also seen a 5% year on year and 32% month over month growth, reaching $89 million. So Newland Labs has reported an impressive 433% year over year and 250% month over month growth, with exports valued at $12 million. However, Blue Jet Healthcare's exports have declined to $3.9 million. So Syngene's exports have also dropped to $7 million compared to $12 million in August 2024. KPI Green Energy is launching India's first externally credit-enhanced green bond, raising 670 crore rupees through a 5-year green bond at 8.5% interest. Now, this bond issue is backed by a 65% guarantee from the guarantor, providing a boost to the company's credit rating. So the bond proceeds will be used to expand solar, wind and also hybrid projects in Gujarat, aiming to supply clean power to 2.1 lakh people annually. Now, this move is part of KPI's green ambitious plan to achieve 10 gigawatt renewable capacity by 2030. The government is clarifying GST treatments after the 56th GST Council meeting. Medicines stocked before September 22nd don't require recall or relabeling, with price compliance sufficient at the retailer level. So a uniform 5% GST will be applied to all the drone categories. Bricks will attract 6% GST without input tax credit and also 12% with ITC, while sandlime bricks will be taxed at 5%. Individual life and health insurance are exempt, along with reinsurance input services. Hotel rooms priced at 7,500 or less per day must charge 5% GST without the ITC. And beauty and wellness services will also have a mandatory 5% GST without ITC. E-commerce local deliveries will attract 18% GST, with liability shifting to the platform if the supplier is unregistered. The government has also clarified GST rules on individual insurance premiums. So as of September 22nd, individual life and health insurance policies are exempt from the GST, which was previously taxed at 18%. Now, this exemption covers policies taken by individuals or families, but excludes the group insurance policies. So reinsurance services are also exempt from the GST, but other inputs like commissions, brokerage, and admin services will not be eligible for the input tax credit. So insurers must reverse the ITC as per Section 17(2) of the CGST Act. India's domestic tyre industry is also experiencing unprecedented growth, with revenue projected to increase 12-fold to 13 lakh crore rupees by 2047. Now, this surge is driven by premiumization, rising exports, and a strong domestic original equipment manufacturer sector. Production volume is also expected to expand 4 times by 2047, with the export market for Indian tyres also set to expand significantly. The growth is attributed to the changes in the tyre industry's revenue mix, increase in raw material prices, and also the growing share of exports. So India's journey towards Viksit Bharat 2047 presents a huge opportunity for the tyre industry to scale up exports, especially in the commercial vehicle and passenger vehicle segments. A commotion occurred at Delhi University's North Campus today, specifically outside Kirori Mal College, as students from the NSUI and ABVP clashed with each other. So the incident took place as Uttar Pradesh Congress President Ajay Rai was set to arrive at the college to campaign for the NSUI. The conflict escalated into a ruckus, with the police being called to the scene to control the situation. Delhi police successfully took control, but students were heard raising slogans against the police. The incident is linked to the ongoing Delhi University Students' Union DUSU elections. On to some more national news. So the Karnataka government's decision to cap movie ticket prices at 200 rupees is facing opposition. 4 public interest litigations have been filed in the Karnataka High Court challenging the government's move. So the petitions have been filed by Home Bail Films, Multiplex Association of India, Keystone Entertainment, and also VK Films. So multiplex owners and film producers argue that the uniform ticket price will lead to reduced income and also financial losses. The matter is being heard in the court today. Notably, Kantara 2, produced by Homebale Films, is set to release next month. Torrential rains have battered India's Uttarakhand, prompting a red alert in Dehradun district after a cloudburst triggered flash floods and landslides, leaving a trail of destruction, reports said. As you can see the visuals on your screens right now, swollen rivers, collapsed roads and overflowing streams left a trail of destruction with at least 5 people reported swept away in Tapkeshwar, DIT College area and also Rajpur Shikar Falls and Bhagat Singh Colony. Disney is launching a new digital comic platform in partnership with Webtoon Entertainment. This will feature over 35,000 comics from Marvel, Star Wars, Disney, Pixar and 20th Century Studios. So the platform will offer a mix of vertical and traditional formats, including archived comics, current runs and also original stories. As part of this collaboration, Disney is acquiring a 2% equity interest in Webtoon Entertainment. So Webtoon will build and operate the new platform, which will provide decades of iconic comics for current Marvel Unlimited subscribers and also attract new fans. So Disney Plus subscribers will also get access to a curated selection of comics as part of the Disney Plus Perks program. On to some global news now. US President Donald Trump is filing a $15 billion defamation and libel lawsuit against the New York Times. So he has accused the newspaper of acting as a mouthpiece for the Democratic Party. Trump claims the Times' endorsement of Kamala Harris was an example of alleged bias and views it has, the single largest illegal campaign contribution ever. So Trump alleges the newspaper has engaged in a decades-long method of lying about him, his family, and the America First movement. He's proud to hold the Times responsible, citing successful litigation against other media outlets. The lawsuit is being brought in Florida, with Trump stating the Times has been allowed to freely lie, smear, and defame him for too long. Pakistan Prime Minister Shehbaz Sharif and Army Chief Asim Munir plans to meet US President Donald Trump next week. So the sit-down is set for September 25 on the UN General Assembly sidelines. Topics include Pakistan flood, fallout from Israel's Qatar strike, and India-Pakistan tensions. Sources say that it's unconfirmed by the officials. Ties have warmed since Trump's June White House meet with Munir on trade and oil. So a July trade deal followed. Trump claims that he brokered an India-Pakistan truce, though denied by New Delhi. This could boost US-Pak relations amid global strains. A UN Commission of Inquiry has also concluded that Israel is committing genocide in Gaza, with top Israeli officials, including Prime Minister Benjamin Netanyahu, inciting these acts. The Commission's 72-page report cites examples of killings, forced displacement, and destruction of infrastructure, including a fertility clinic, to support its findings. The report alleges that Netanyahu and the other officials are orchestrating a genocidal campaign with the intent to destroy the Palestinian group in Gaza. Israel has declined to cooperate with the Commission, accusing it of having a political agenda. The United States and China are reaching a major milestone in the negotiations over TikTok. A framework agreement has been reached to transfer the ownership of the popular social media app to a US-controlled entity. Now, this development comes after months of talks between the two nations aimed at resolving their trade differences and also addressing US concerns over national security. So the agreement is set to be finalized during a call between US President Donald Trump and Chinese President Xi Jinping on Friday. So while details of the deal are still scarce, US Treasury Secretary Scott Bessent has confirmed that agreement will preserve the cultural aspects of TikTok that are important to China. China is also making history by entering the top 10 of the UN's most innovative nations, replacing Germany. Now, this significant shift is driven by China's heavy investment in research and development, with firms in Beijing leading the charge. Switzerland remains at the top spot, followed closely by Sweden and also United States. China's rise to 10th place is a remarkable achievement considering it's the only middle-income economy in the top 30. Apollo Tyres becomes the new jersey sponsor of the Indian cricket team, signing a deal that will run until 2027. So the company will be paying approximately 4.5 crore rupees per game, surpassing Dream 11's previous rate. Now, this partnership is a significant development for both Apollo Tyres and also Indian cricket team. Now, with this deal, Apollo Tyres is set to gain prominent visibility on the team's apparel, broadcast to millions of viewers worldwide. So the company is committed to supporting Indian cricket and also engaging with a vast audience of cricket enthusiasts. With that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned to NDTV Profit.
Abneesh Roy joining in for more on this is Executive Director Research, Nuvama Institutional Equity, someone who tracks the space so closely. Abneesh, great to speak with you. On the core question, if ever there was policy momentum required for a space, FMCG has definitely received it. Why has it not translated in your view?
Yeah, thanks and good morning. Good questions. See, firstly, if you take any stock index, the issue is there will be some outperformers, some laggards. So that will not give you the true picture. You highlighted that, yes, some laggards like Varun Beverages. So we have been highlighting the Campa Cola risk, and the weather has been quite on the challenging side for Campa Cola and cola categories, even for Pepsi, etc. Because last 2 quarters we have seen very unseasonal rains, and this quarter also we are picking up that overall demand for the summer categories like cola, for beer, for some of the HI, etc. Even for some paints also, slight impact will be there because of very high rains in Q2. Second, if you see within the same sector, Britannia has done so well, and Tata Consumer, Godrej Consumer, Marico. So you have to see stock by stock and not the index. In terms of outlook, you're absolutely right. Whatever could go right from either God or from the government, I think everything has happened. So we have seen also monsoon in most parts of the country, it has done well. Of course, there is a flooding in Punjab, there is a flooding in Rajasthan. There is a big deficit, almost 25-30% deficit in the monsoon for Bihar. But I will say monsoon in any year, it's never a perfect. So you have to see the broader picture. Broader picture is that overall country will see more rural consumption boost. Now, the third point is, if you see last few quarters, urban demand, especially in the mid and lower, has been challenging. So because of this latest GST rate cut, I do expect that many FMCG categories will see boost. Coming to a specific point, what are the challenges? See, challenges are there. We are seeing this very quick timelines are there by 22nd September, which means in the next 6 days, we have to see the rollout of the new pricing. But government has also given that the existing packaging can be used. So you can just put the sticker and do that. We also seen Hindustan Unilever kind of company come out with full page ads where they are saying on the affordability. So my sense is consumption will pick up because of 3 reasons. One is 5 rupee, 10 rupee, 20 rupee price point. Clearly, there will be a volume boost for every category where GST rate cut has happened. I think the real benefit long term will be in terms of the snacks and biscuits category, because that's bought as a pack. Second, of course, will be affordability. Suddenly, if the shampoo becomes affordable by 12-13%, and then the soaps also becomes affordable, you will see both grammage addition at the 10 rupee kind of a price point and affordability. So there will be customers who are earlier downtrading to regional brands, to smaller brands. I think they will come back to their favorable brands because now they can afford it. So yes, I will say that this is a good buying opportunity in some of the FMCG stocks. Our topics will be essentially, yes.
Abneesh, sorry, can I just ask you? I mean, if I kind of expand the horizon slightly, right? And you understand this so well, so I want your insights here. That the thing that we hear from the buy side guys is that because it was a high ROE, high ROC sector, right? And it was not attacked. The distribution wasn't attacked. Now regional brands, online brands, etc., are coming in and attacking individual verticals of large FMCG names, which are also large verticals by themselves, and therefore can serve as a business for new startups or younger companies. can this continue for the next few years, wherein we do not see pan-India giants necessarily having the size and the distribution advantage, and therefore their revenue growth, their ROCs, etc., and their margins continue to come off over the course of the next 5 years, and therefore their multiples as well might contract from where they are right now. They're already lower than what the average multiples were for the last decade. Can maybe those also go down lower?
No, I don't think so at all. India will not follow the US model of D2C taking market share from legacy player.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should
Hello and welcome to NDTV Profit. You're watching Know Your Company, that is KYC. On NDTV's radar today, we have a KRBL, an interesting one to watch out for, not only from the business perspective, but all that has unearthed right now from a corporate governance perspective by the independent director and the response that the company has given. What is going to be the future course of action? I am Hiral Datia. With me is Mahima Vachajani. Mahima, interesting company to watch out for. We have spoken to them earlier as well on KYC, but this is going to be an interesting conversation. Let's quickly take a look at what are the key questions that we have with KRBL's management. Firstly, are they confident that the allegations are false? And what is the name of the auditor from here on? Secondly, how receptive is the board on the difference of opinions that have come in so far? And on number 3, if you have to look at the justification that the management would have on the remuneration increases that have happened for the top brass in FY25, because we are talking in the range of almost 13 to 15%. So these are the top 3 that we should be looking at.
Absolutely. And, you know, in terms of the reasons as to why we've picked up this company, of course, the corporate governance is one thing, but the other part is the business part, right? We've seen inventory unwinding happening. Will this continue? What is the timelines for this inventory unwinding? With regards to the other part, that is realizations, because that's hurting. What is the overview going forward in terms of exports? Because that is kind of putting pressure on the margins as well. And what to expect in terms of margins going forward when it comes to the trajectory, that is something we would want to know from the management side with regards to where business is concerned.
Absolutely, and these are the key questions which are really pressing at this point in time. But let's quickly understand a little bit about the company as well. To start off with, as we know, it is one of the largest branded basmati rice companies in India, and India Gate is the flagship brand, and that is what I think all the viewers will connect with as well. They are leaders in the packaged basmati rice segment, exporting to nearly 90 plus countries. And if you talk about seed farming, procurement, milling, branding and global integration, all of this is absolutely integrated. So it's a vertically integrated company, and it's growing the non-rice food business as well. Currently, they've given a target of around 200 to 250 odd crores, which is nearly around 5% of the current revenue is what you're looking at. Very quickly, if you talk about the core matrix as well, it's the largest rice milling plant that they have, and 29% is the rice realization, which is higher for the company from here on. Mahima, over to you on that.
Right. So, in terms of products, you know, it basically operates into 3 different categories. The first one is branded basmati rice. The second one is biryani masala, which they launched in FY24. The brand is known as Uplife. The Uplife is of course for the edible oils, healthy edible oils, and that is also very recently launched for them. So they are now diversifying from their core rice segment to something like masalas and oils as well. In terms of rice byproducts, that includes bran oil, your de-oil cakes, your electricity done by the electricity, that is your biomass, solar, wind, and also animal feed. So that you know forms a part of the overall products. But with regards to where revenue mix is concerned, that's an interesting one, because almost 80% of the revenue comes from branded rice, around 20% comes from export, and this includes your US and UK as well, and around 5 to 7% from non-basmati rice for now. So non-basmati rice being the smaller one here, but branded a big one, almost 80%, and 20% from the export side of things.
Okay, let me pick it up from the export side of the business as well, because within the exports, if you look at the split, Middle East is maximum at around 61%. That's the share that they hold, followed by rest of the world, which is 18%, Europe, again, around 11%, and US, Canada is 10%. But if you have to look at the tariff angle of it as well, the overall exposure of any hindrances on the back of US tariffs on the overall business is just 3% if you have to talk about a revenue perspective, and that is what we are looking at in terms of the overall impact. Moving from there on, if you have to look at key operations, seed development, again a fully integrated operation, their procurement of paddy, storage, processing, packaging, branding and marketing. These are few of the verticals that KRBL resorts to as well. But taking all of this into consideration, let's quickly look at the rating parameters from here on. Firstly, if you have to look at corporate governance, income statement, balance sheet check, these are the top three that we will be looking at. In fact, corporate governance is the first one today, which usually is not as the trend. Cash flow is another one that we will be looking at. The shareholding, street credentials, the street coverage and the valuation picture. This is what we will be considering on the show from here on. But first up, let's look at the recent news, which is the corporate governance issue that has been raised by the independent director. What he has indicated is that there has been inconsistency with regards to where the board dynamics are concerned and inconsistent with safeguarding the stakeholder interest. That's the first bit. What they've said is the recording of the minutes of the meeting has not been done in a consistent way, and there have been a lot of instances where information has been withheld by the board. In fact, withholding has impacted informed decision making by the board as well. There has been unjust write-off of certain export receivables without any adequate deliberation, and there have been concerns with usage of the CSR funds. This is another aspect which is very big. Arbitrary distribution of variable pay and annual increments, we spoke about it, 13 to 15% is the kind of increase that we've seen in FY25. There have been changes in the object clauses undertaken without any decisions, and there have been undue interferences by invitees in proceedings of the board. These are the key corporate governance issues that have been raised, where the company did come out and respond as well that they will be appointing an independent third-party firm to review the observations by the independent director. And there was an emergency board meet that was convened yesterday as well to discuss the observations by Anil Chaudhary. And there's an investor call which is scheduled today at 4 p.m. But before that, we will try getting you all the answers on NDTV Profit on KYC Mahima.
Absolutely, Hiral. And, speaking about the governance, the next part that we're looking at is the income statement. In terms of where the income statement stands, we take a look at the four metrics. That's your revenue, EBITDA margins, as well as net profit. Overall, if you see a 3-year CAGR, the revenue has grown at a 10% CAGR. EBITDA hardly a 1% CAGR, and same with net profit as well. Even in terms of the margin trajectory, the margins have fallen, and this is because of the realization being at a lower rate. In terms of the Q1 numbers, though, Q1 FY26 has seen quite a turnaround. Overall, revenue saw a growth of 32%, EBITDA saw a growth of 65%, net profit saw a growth of around 74%. So while the 3-year CAGR for the company has not been very impressive, Q1 has done well. But keeping in mind how the last 3 odd years have performed, we've taken a conservative approach and given a thumbs down to this one in terms of margin trajectory as well as the kind of CAGR at which both revenues and profits have grown. So that's why we've given it a thumbs up.
Right.
Thumbs up.
Yeah. Let's look at the balance sheet. I wouldn't dwell too much time into that because everything has remained stable from the last time we spoke to the management. The only thing is that the equity in FY25 has fallen, and this is on the back of the 325 crore buyback that the company had undertaken in FY24. And that's the reason why you're seeing that kind of a trend with regards to where the equity goes. But in case of the book value, stable growth, cash and bank, also spectacular growth that has come in there, and hence a thumbs up in terms of the balance sheet.
Right. Even in terms of the cash and bank growth that you're seeing is also, of course, reflected in the cash flow statement. And we're seeing the cash flow from operations, which has seen a significant growth from a negative 360 crore to a 961 crore. Overall, EBITDA has fallen, because of which the ratio that we generally look at in terms of cash flow conversion of operations to EBITDA, that has seen that trajectory. In terms of the overall net cash flows, that has also taken a good uptick from a negative 149 crore to a 186 crore. But overall, because of the falling in EBITDA, the conversion might not take place to the rate which was expected. We have taken a conservative approach here and given it a neutral rating for now.
Okay, so that's cash flows. Now let's look at the return ratios. It's interesting because there was a time when the company was able to achieve a return ratio of almost, that's a ROCE of 21%, and this was back then in FY23. From there, the numbers have just exchanged, and now you're talking about a number which is 12% in FY25. But the trajectory in terms of the growth that the company has cited so far is absolutely strong. And they've said that it will come back to these kind of numbers in the past. And hence, a neutral rating right now till the time we see that uptick which could come in FY26 as well. So if they are able to see that trajectory moving upwards, probably that sideways, a neutral rating would actually turn into a thumbs up. But as of now, a neutral, a conservative outlook on the ROCE and a neutral rating.
Right. The next one is shareholding pattern. Well, overall, it's a well-held company where promoters are concerned. It's remained at 60-odd%, the overall promoter holding, and that is not diluted so far. FIs have also increased their stake from a 2% in March 2022 versus of almost 7% recently in June 25. DIs have not participated much in terms of where the counter is concerned, so that's not a metric we look at. But public shareholding has gone down a tad bit from the 31% to that 26% mark. But overall, FIs have been increasing stake, and promoters are confident about the company and have not diluted their stake, and therefore we've given it a thumbs up because it's a well-held company.
Absolutely. And a neutral one coming in terms of the street credentials, because if you talk about 6 months, YTD, 1 year, 5 year returns, absolutely range bound, 32% to 55%. That's the broad range that you're picking up. So no major gains coming in for the investors, but not led to losses as well, and hence a neutral rating.
Right. In terms of valuations, now if we take a look at KRBL's valuation itself from 1 year forward perspective, it's trading at 14 times versus that of 5-year average of 11 times, so an expensive one there. As compared to peers, LT Foods will be trading at around 18 times, so largely in line with what peers are doing. Lastly, in terms of where the analyst recommendations are concerned, there are 3 buy calls with a return potential of 31%. So we've given it a thumbs up here, considering the return potential, and of course, valuations largely in line with peers and not very expensive versus the consumption theme that we've seen.
So that's a thumbs up on the ratings as well. But let's look at the rating parameters. Corporate governance, income statement, a thumbs down right now. Balance sheet is a thumbs up. Cash flow is an absolute neutral. On this one, you have shareholding and valuations and analyst recommendations, which is a thumbs up. But your return ratios and street credentials are absolutely neutral. And taking the overall 8-parameter rating into consideration, where corporate governance is a new addition, we've given it a 4.5 on 8, which is still a pretty strong rating in spite of the corporate governance issues. And I think we will ask the management this key question from here on. In fact, let's get in Anil Kumar Mittal, Managing Director of KRBL. Mr. Mittal, welcome to the show, and always a pleasure to speak to you at NDTV Profit. My first question coming to you is on the corporate governance issues that have been cited by independent director Mr. Chaudhary, the allegations that he has laid. You have said that the external auditor will be reviewing the allegations. How confident are you that these allegations are baseless from here?
See, first of all, it was a shocking information to us when we received the resignation from Mr. Anil Chaudhary. He was there on the board for almost 1 year, and all of a sudden in last 2-3 months, I don't know what went wrong that he has to give such type of a report, and I will call it a hostile attitude, not his observation, or what is the correctness in his observation would be known when we appoint an independent law firm who is going to audit independently and look at each and every point as raised by Mr. Anil Chaudhary, and we are quite confident that nothing will come out. This is our view, that nothing should come out of.
Mital, everything will be fine if nothing comes out of it. But why would an independent director actually make up any allegations like these?
We are ourselves confused. It took us 4 or 5 days to just understand after we received the resignation that why he has put such type of a claims. See, my company has 4 independent directors. One was Mr. Chaudhary, and there are other 3 independent directors. If that would have been the situation, what Mr. Chaudhary is saying, they would have also given their resignation. So let us watch and see. My commenting at this part, because I am an interesting party, will not be good. It is always the third party who is going to give its view to the independent directors, and then we are going to articulate on that matter.
Okay, Mr. Mittal, hi, Mahima also joining in. Just want to understand that considering this has already come out now, how are the other independent directors reacting to this? To what level are they also supporting this difference of opinion? What is the view like?
No, definitely they were the person initially. See, they after their meeting yesterday, they only came to the conclusion that we should appoint an independent law firm or audit firm who should vet the allegations. And according to them also, they were also quite confused with all the allegations. The chairman of CSR committee, the chairman of audit committee, they were all the different committee, independent directors were there. All the directors were also there. Myself was also present, and everybody is confused that what was the reason of this type of an hostile attitude.
So I understand that are the other independent directors, which are the remainder 3, also supporting Mr. Chaudhary's allegations to any extent?
Not at all. You are not understanding. If they would have agreed, they would have simultaneously put their resignation. Mr. Mittal, this is happening. After, see, we have every quarter, there is a board meeting. Mr. Chaudhary was there also for the last 1 year. I don't know what has happened in last 2-3 months that he has to take that attitude. We are ourselves very much confused. My CFO was there. My chief accountant was there, my company secretary was there. I was asking again, and everybody is confused that why Mr. Chaudhary has to take that decision and that action.
And what about the independent director? Because he has highlighted suppression of dissent as a concern. How much does the board support the difference of opinion or assessment?
It's a total, we do not agree to this at all. We do not agree to this at all.
Okay, what would you have to say then?
No, I think so. Everything would be clear after the vetting of an independent law firm.
Okay. Mr. Mittal, the other is with regards to, the remuneration. He's actually cited your remuneration, Arun Kumar Gupta, Anup Kumar Gupta and Priyanka Mittal's remuneration have seen a sharp increase in FY25, and you're talking about 14 to 16%. And if this in totality has to be taken into consideration versus the increase of other employees, this is a concern that has been stated by the independent director that these are arbitrary. What would you have to say to this? Is it a different policy that has been followed for promoters and other stakeholders versus employees? Why this kind of a stark difference?
Do you think anything in a corporate world can be done arbitrarily? It are always discussed, numbers are given, numbers are agreed. After they are agreed into the committee, then they are discussed in the board meeting. When everybody agrees in the board meeting, then only those remunerations are cleared and are paid accordingly.
Mr. Mittal, just want to understand one thing.
Let me tell you what the remuneration is talking about. A company which as a family, we started as a family and converted into today a big corporate. You tell me, what are the salaries? If I work outside, let me tell you, I will be getting double the salary what I am getting in my company.
Understood. Mr. Mittal, just want to understand, considering that you will be appointing an auditor, what are the timelines looking like? Can you give us a rough perspective as to when this audit will, start taking place, and roughly as to when will, investors start getting answers?
either today evening or by tomorrow in a day or two. We do not want to delay. We will decide for the independent law firm who is going to do the audit. In our mindset, we want at the earliest possible, but for the safeguard reasons that we do not become defaulters or we are not able to give the result in the right time, we have kept it on a higher side as 30 days.
Mr. Mittal, one quick question I have from an investor perspective. You know, the investor has a trust in the promoters and the management of the company before they make their investments, right? For the benefit of the investors, how confident are you that the promoters, the directors and the stakeholders have not really got into any of these concerns that have been stated by independent director Mr. Chaudhary, to give them that comfort right now? And you're confident that you will, or the company and the board will come out clean with all the allegations that have been raised, basis the independent auditor that will be appointed and will come out with their findings?
See, as far as we are concerned, we ourselves were in shock when we received the resignation.
I understand that. I understand the shock that you're going through. But my question is, how confident are you and the board?
No, we are 100% confident, but let me tell you, as far as investors are concerned, we are inside the board. When we can be under shock, then the investor will be under more shock than me. Till the time they come to know what is the truth, and we are quite confident we will 100%, not 99, we will come out 100% clean.
Okay, got it. Okay, Mr. Mittal, the other aspect that we want to know is that over a period of time, your margins have been under pressure, considering this is on the back of export realizations. Just want to understand your view with regards to going forward, how will margins improve?
See, let me tell you, as far as commodity business is concerned, it is like a roller coaster. The prices of paddy goes high and the prices of paddy goes down. As the prices of paddy goes up and down, there is a percentage of the share goes into a trading type of activity of the commodity. And that trading nature of the commodity reflects our margins also. But we are quite confident looking to the crop this year, and what we have decided that we are going to have a good margin in FY26.
So, Mr. Mittal, that's with regards to margins go, because in the end, investors want to know what business can do from here on. There was inventory unwinding to continue. Unwinding did happen in terms of FY25 as well. What is remaining in terms of the inventory in terms of FY26? What is the timing where you will be able to unwind that entire lot? If you could help us understand that aspect.
Ma'am, actually, we are the only company. I'm using the word, you can note down that we are the only company who really ages the rice for 2 years. If you go to the market and ask from any of the rice exporter or a trader or a miller that I want a 2-year-old rice, nobody can offer you except KRBL Limited. And that is our